Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Welcome everyone. Guys, thanks for joining on Zoom. Just let me know if you guys can hear me. Welcome everyone. Thanks for joining. Everyone on Zoom, just let me know if you guys can hear me. I have a headset, so just in case we're going to listen to Powell's speech, just want to make sure you guys can hear me. Okay, thank you. Okay, awesome. Okay guys, we're not gonna wait for that final countdown for 15 minutes. We're gonna get started in like 2 minutes. Okay, so everyone, we gotta really gotta move, guys, because 90 minutes, we got less than 90 minutes to do top-down talk, charts, everything. So we gotta go a little faster today. Okay, so we're gonna get started in 2 minutes, guys. Just give me a moment.
Hey guys, good morning. Welcome to the live session of Stocks Number Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Okay, welcome back, guys. Thanks everyone for joining. Welcome, Stocks Number Trading. This is our second session, and then we got a third one later this evening on a webinar on our trading toolbox and some indicators. So on TradingView. So guys, it is FOMC. Everyone take a deep breath. We're less than 90 minutes away, so we got a lot of work to do. We're going to do it again. Some of you guys maybe haven't changed your top-down analysis, kept your zones and points of interest, points of control. I could have left mine as well, but we'll start fresh. Just in case you're just joining, we'll start fresh. I'll go a little bit faster, so we'll speed up things. As long as I can get started by 1 and do all the charts, I'll have them done in 30-40 minutes, and then we'll get ready. So just remember, guys, it is FOMC. This is a big one with the economic projections. This is the first one that could be a rate cut in about 1 year. Okay, so it could already be baked into pricing, and it could be buy the rumor, sell the news event. However, markets could just continue moving how they're moving. So we got to listen more to in Powell's speech. We got to listen more for forward guidance. Maybe it's already baked in a 0.25% decrease. That's fine. But we got to listen. In his speech, is he talking about more rates to come this year? Then that could make the stock markets bullish again and start rallying again, hitting those all-time highs and continuing to go. So we got to kind of listen to what he says, maybe how he answers the questions. Maybe this is a rate cut now and we're looking to pause or look at inflation and job data in the near future? That's a different tone of voice. If he says that, then markets could see some selling pressure. Stock market, NASDAQ and US30, S&P, there could be a lot of profit taking. A lot of people are in long profits, trading at all-time highs. I'm sure that they want to realize some profit too. So if they hear the kind of his tone of voice, maybe he starts hinting that we're cutting it right now, but we're looking to pause and see how everything goes, look at job numbers, inflation, tariffs, etc. All those things could see selling. However, if he's talking, we got more rates to come in the next few months, maybe a couple more rate cuts for the remaining of the year, that would then maybe send markets bullish again. Okay, so they will release the numbers. Probably 95% is a 0.25% decrease. However, we could see a half point. Analysts are always talking about. I don't think there's going to increase. We can maybe take that out of the conversation. So it's either a 0.25% decrease or 50 basis points, one or the other. That's what everyone is kind of hinting at, but we got to listen the conference at 2:30 when he comes out, and that's going to be what the bigger move probably is. Okay, so are we all good, guys? Let's get started. I got the record button on. We're all good. We got Zoom, we got YouTube. Guys, sorry, I'm a little flustered because I just got back. I had to do a few things and got to rush in to do this. So, guys, if you joined us on our morning call, we went over all of this. So I don't want to spend too much time doing this, but the federal fund rate, the previous FOMC was 4.5%. They paused, consecutive pauses. This is the first one in over a year that they're forecasting a decrease. You can see already in the forecast, it's at 4.25%. That's 25 basis point in the forecast. We'll see. So if it comes out here, the actual number, 4.25%, we know right away it's a 25 basis point cut. If it comes out 4%, then we know it's a 50 basis point cut. So that's what the number will be released. There will be lots of volatility right at 2 p.m. Right as soon as we hit 2 p.m., you're going to see either a big bullish candle or you might see a big bearish candle. Again, there could be whipsaw action. There could be wicks. There could be volatility, or it could just trade kind of like how US30 traded this morning at 9:30, just pumping and it didn't really pull back, kept closing at the highs, ignited candles, kept pumping. We could see something like that. Okay, we got to take it basically candle by candle, right? This is the first one I told you. The last one did not have the FOMC economic projections, so this one has those economic projections. There's an FOMC statement, then 2:30, 30 minutes after, then we have Powell coming, and then it's the actual press conference. If anyone has a live link in the Zoom chat, if you guys want to share it with me, when we get close to 2:20, 2:25, I can put it on. That's why I got my headset on, so we can all share the sound and listen to Powell while we're trading, okay? And then I'll try not to talk as much while Powell is speaking, and we all listen to it together. We'll see how the markets are moving with his speech. If anyone picks up on anything, but make sure in the chat, if you hear cuts to come in the future, pause, all of these things. Just any words that can signal market direction or how it will move, okay? And last thing is, please use proper risk management. Okay, this is not a gambling event. It's exciting, and it's kind of exciting. It's like a Super Bowl for traders. It's a big event, right? But you don't want to trade reckless. You don't want to do something stupid. So right now, I'm all reminding everybody on this call: just trade with proper risk management. I'm only trading with 0.25%, not just a 0.25% of my normally what I trade with on a 1% or 1.5 on my daily. I'm trading with 0.25. If I get stopped out, I'm going to still walk away from FOMC with a smile on my face and not be a revenge trade, not go on tilt, not let this affect me the way how I trade tomorrow, all of these things. If you guys are already in good profit, then don't piss it all away. If you guys are already in a little bit of drawdown, this could even make you deeper into drawdown if you don't know what you're doing, okay? So if you're just here to learn, we're here to learn, okay? Everybody should have their own rules. I don't need to go over this on a daily basis. We're at the point where now, we should know what we're doing now. Now, hopefully, you guys are starting to understand. If you guys are constantly losing as traders, you got to fix something. I can only do so much. Dave can only do so much. It's at a point where you got to start to do something. Just like me, when I was learning to trade and I was losing, there was no one there holding my hand and telling me, whispering in my ear every single day, Ron, do this, do that, reminder, this, that. No, I figured it out. So I hope that you guys are also figuring it out too. We are here with you guys, but at some point you're gonna have to learn on your own, okay? So let's try for that. Let's strive for that, okay? We're all adults here now, okay? We don't need to keep reminding these things, right? It should just be automatic nature. When you see all of these high impact US folders, just use proper risk management, okay? This is what the Fed is gearing up to for its first rate cut in 2025. Okay, I'm not going to go over all this news. We already did all this. Discord, guys, we sent out a few signals. You know, if you're still in these signals, you might want to realize some profit or do something. There was a gold signal sent out this morning, 36.70. You can see 36.70, 36.90 up here. That would be about 200 pips. So good, nice move. There's your double bottom right there. Volume closed above. Continue to respect 36.70, and there was a nice move out of there. With indices, the buy out of the gate. So there was a buy right over here. Again, it was an impulse break, so it hasn't retraced back down into here. We caught that at Wall Street too. We were waiting, but remember we caught a little buy right here, kind of couldn't break out of there, but then it came back down deeper, right into 50% of that deeper candle. That's where, I got back into the market. I got an alert there and I caught a little bit of this move. Okay. I know probably none of you guys believe me when I say this because it was after the call, this and that. I know how it is. I've been doing YouTube for quite some time, but if you guys believe me, I have alerts just like I teach you guys. I get alerted and I watch what's going on. So I know 99% of you guys won't believe me because there's no proof of that. It's all good. I know what I did and I know what's in my pocket right now. So if you guys don't believe me, that's all good. I'm going to continue doing what I do. If you want to join the free Telegram channel, it's right over here. Okay. So here's the free Telegram. Here's the link to our live session right here. Here's the Fed decision in September. This is coming from this Kalshi live. I just kind of took a screenshot of this just right here at noon. So cut 25 basis points. About 89% of analysts are saying right there, but there's a 10% chance that something else could happen. So a cut greater than 25 points. Next thing would be 0.5, 50 basis points. Roughly 9-10% is saying maybe a 50 basis point. And then Fed to maintain their rate right here. If they just do a pause, 4% of analysts are saying there could be a pause today. If there's a pause, that will shake up the markets because everyone is expecting a 0.25% decrease. So if they pause, that's going to really, really shake things up. And the market doesn't like shakeups. It doesn't like this. It likes to flow how it should be. So anything to disrupt could cause extreme volatility and changes in momentum. Okay. So this is a free Telegram. It's pinned at the top of the YouTube channel for you guys. Join it, right? Okay. And then if you want to join the team, everything is over here on our website, stocksnipertrading.com, education, live sessions, blog. We just did a blog this morning right here. So if you want to go over this while I'm doing my live call or whatever you guys want after, make sure you understand what federal FOMC is. It's the federal funds rate, economic projections, FOMC statement, and the press conference. It's going to look exactly like this. You're going to see Powell in front of the podium. There's going to be an audience there asking him questions. He'll be giving forward guidance as to what the decision was. Okay. And this is what the market is waiting for. It doesn't care really too much about that number, okay? It's going to have a little bit of volatility but this is when the real stuff happens. So even if you don't take a trade, watch after hours, like watch this over again and listen to this. It might help you how the markets move tomorrow. Tomorrow's Thursday. It might move the markets on Friday, and the way how it's going to move into next week, next month, and the rest of this year could all come down to what this gentleman says at 2:30. Okay. And there's everything, guys. So if we can just finally, one last reminder, if we can hit the like button on YouTube, if you're getting value out of our channel, hit the like, subscribe to the channel, and welcome aboard. Okay, so this is the way how I do my charts. You guys let me know because it can get busy like this. I can have US 30 right over here. You see how it's three split screen charts. So we got US 30 on the left, we have NASDAQ in the middle, and we have gold over here on the right. Do you guys like how it is like this? Because I'm going to do a top down on each one of these. You're going to see some zones, you're going to see some yellow lines, you're going to see some purple lines, you're going to see some red lines. Do you guys, is this okay? Do you guys, like, for me, I know what I'm looking for when I'm trading, but for you guys, normally we do it like I do US 30 and NASDAQ to kind of open it up, and I leave gold by itself. But in a situation like this, if I do it like that, then I got to be flipping to gold on its own, and then I got to go back to indices. Someone's going to say, Ron, go back to gold. I go over here. Well, someone will say, Ron, go back to NASDAQ. I got to go over here. So let's make up our minds now, because I don't want to be flip-flopping on an FOMC. Are we all good like this? And again, you pick the security that you're looking at. If you're looking at gold, don't worry what's going on NASDAQ. Don't worry what's on Dow Jones. If you're trading Dow, let's not worry about what's going on gold. Okay, you focus on your chart, right? So let's do this. I'm going to leave the financial juice over here because it gives us, every time Powell is speaking, it will give his remarks. So this is live too, so I want to keep that on there as well. And at 2:30, if you guys want, I have my headset on. We can share the sound. If someone gives me a Powell link of a live link that actually works, because I don't have time to go through and find all these links. If someone has it, just shoot it in the chat around 2:15, 2:20, right prior to his conference, and then we'll put it on and we'll all listen to him. Okay? Are we all good? If we're good, guys, let's hit the likes in the chat. You can tell Ron is wired on some coffee. So here's my third coffee of the day, 3 coffees. Okay, it's non-stop here, guys. And then you might see later this evening, maybe I'll have a 4th coffee during the webinar. Okay, so it's 12:48. We have an hour and 10 minutes to go, so let's take our time. Let's do this. I'm going to start off with, let's do gold. Let's get gold out of the way, okay? So we're going to do a top down on gold. This is the daily bar indicator, so I can tell where we opened. We made a high, we made a low, we're coming right back up to here. So there's a lot of indecision on the daily on gold. Gold's all over the place, okay? But what we're going to do now is a top-down analysis. So I'm going to start off on the daily. We're going to come down to the 4-hour. We're going to come down to the hourly, and finally we're going to come into the 5 minutes, okay? So let's start off with the daily and see what is going on with gold over here. Okay, so first thing is first. You'll probably repeat myself if you were on the call with me this morning or the last week or the last month. I'm saying the same thing over and over at these zones because we haven't revisited these zones. This was a previous all-time high, 3,500 on April 22. Then all summer, basically, April, May, June, July, and August, we have been consolidating right over here underneath this area where it was resistance here, resistance, 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 and finally they redistributed all of this volume right at the beginning of September, okay? And this is where gold has taken off to all-time highs. This is a zone below us. It's representing demand if it ever comes down here, okay? So I don't need to continue to chart what's going on down there. I hope you guys were nowhere. I don't think I don't think FOMC is going to drop gold all the way down to there today. And that's something, who knows what goes on around the world. There's so much going on around the world, I can't even keep track with everything right now. And there's too much, okay? So we've been consolidating, accumulating all summer, and gold has released that volume to the upside, all-time highs, and there is pullbacks, but nothing, no bearish candles are closing below critical structure to suggest gold is going to sell off. It continues. You look at the wicks, came down, back up, came down, back up, came down, back up, came down, back up, came down today, and it's going right back up, okay? So all dips are getting bought up. So it's still trending up, okay? Let's just now, this 3,500 orange line, let's just make it a yellow line to represent daily point of interest, okay? And then let's continue charting with what's going on above us. So remember this flag, this bull flag that I was talking about earlier this morning? Again, I'm going to talk about this same exact flag. Okay, right there. I spoke this morning about how I determined the size of this flag. Just look at that bullish candle, came up, closed right there. This was an impulse right there. You can connect those two. Where that bearish one closed, look at the next one, opened right there, came up, closed inside. This was a bearish candle. Again, impulse. Wicks are showing impulse moves, but the volume has continued to close inside here. Here was another impulse move, closed right there. Then the next day had that complete pullback, then start breaking out. So this candle right here on Monday, September 15th, start of our week, this week, is above. So this is still a strong green zone in the market. You can place a line right at exactly 50%. You're welcome to place an alert on there if you like. So when it comes down to you at a certain time, you know, maybe today, maybe tomorrow, maybe next week, if it comes down there, you'll get an alert in there. Maybe it might be an opportunity to buy out of there. It might be an opportunity to build a double bottom, then strengthen your buy decision. It could also cut right through here and be a wick that comes down here, similar like this candle, breaks but closes back above. So it could be a fake out that breaks, catches a wick, closes back in the green box, and then continues its move to the upside. So this is like a proper retest pattern. This is a liquidity grab, closing back in, and then like a fake out and drive. And then our other third option is sellers are strong. They break it right through there. They close it below there. It's a black candle that closes. Then when that happens, we flip that zone to red. It could signal that there's sellers, and then we push to the downside. Then that could switch sentiment in the market, and then we're moving to sell side. We're moving with the sellers, okay? But no bodies have closed below there. They came close. They impulsively moved down, but nothing closed below, okay? So this start of the week now, this is an important candle, an important daily candle, because it's a Monday and Fridays are very important daily candles on the weekly. Anytime a week opens up on a Monday, you got to calculate this because it opened up and had this much volume at the beginning of the week for a reason. And where it closes on a Friday, also, why did they close it with that much volume and where on a Friday? And just repeat this process over and over and over. So I can see that that candle, I can determine now the entire volume that candle has traded. It has closed. There's the opening balance, closing balance. So I'm just looking at the opening price and the closing price. Real simple, real easy. Every candle has an OHLC, an open, high, low, and a close. I'm just looking at the opening price, closing price, and you see how the Fibonacci has exactly determined my bullish point of control. Not only bullish point of control, it also identifies the 50% zone. And you can see today's wick right there. I'm going to place that a purple line because it is representing today's low wick. This big bearish candle came right in there. Exactly 3,660 and a penny on the dot right there at 50%. Okay. That's how accurate this style of trading is. Okay. Not always, but if you keep up and you learn this, I'm pretty sure you can do good as a trader. If you're patient, you're disciplined, and you have good risk management. Okay. And over time, I'm sure that this will keep you as a high probable trader. Does it always work? No. Is it probable over time? Yes. Okay. But you don't just buy blindly. You got to see what's going on in there. Okay. So there's my purple line now representing a low date. Do you guys understand how I construct a everyone should be able now, if you spent 1 or 2 sessions with me, you should be able now to understand how to construct a point of control. If you don't know how to do this, then I'm going to do a private webinar next week with the snipers in Zoom to make sure you guys understand this. I'm going to call you guys out on the Zoom call individually. I'm going to make sure you guys understand this. It's not, it's to that point where it's gotten now where I want to make sure you guys know this. Okay. Like it's not rocket science, guys. This is pretty simple stuff. Okay. So it came right in there. Look at the reaction. This is how you can retest this strategy. Here's how you back test it. You guys can tell me, did it come in exactly Monday's 50%? I should hear a yes, yes, yes from everybody. It's not up for debate. There it is. It came right in to 50%. If you're going to argue with mathematics, good luck. I'm not here to argue with you. I'm telling you how mathematics and probabilities work. That's how it works. Okay? You want to argue this, go argue with Mr. Leonardo Fibonacci, if you can find him, because he invented this in the 14th century. So good luck. If he's still alive, tell him Ron says hi. Has anyone ever met Leonardo Fibonacci? Not Leonardo da Vinci, Leonardo Fibonacci. He's your cousin? Yeah? Okay. But now we got to continue to follow this volume and see how I stretch these into the zone, into the future. Stretch them as far as you want. Okay. Now look at today. We are at an all-time high. Let's not forget about this. There's my orange all-time high. Yesterday we traded right up there, all-time high. 3,700 psychological number, give or take $2-3. Okay, $7,703 actual mathematics. 3,700 psychological zone. Now, when we hit that all-time high, we came back down, we closed right here. So let's now figure out some points of interest. It is 12:57, guys. So Ron, it will go a little faster on Dow and NASDAQ, but I'll be doing the same thing on Dow and NASDAQ. So I'm taking my time with gold to make sure you guys understand this, because then I'm going to go faster when we get to Dow and NASDAQ. And this is where, if you got a question, I really want to take my time to explain this to you. Okay. So you see, we hit the all-time high yesterday and we closed right there. Closing price, closing balance. We look at how we opened directly right beside. That's called a transitional open with no manipulation. When you see a gap up candle or gap down candle, you know there's the market is manipulated, right? If something closes today, if this coffee today that I just bought is $2 today, and then I go to the coffee store tomorrow and then she tells me it's $2.25, I'm going to be like, what are you talking about? Yesterday it was $2. Why is it $2.25 today? And that causes a gap in the market. Maybe I only go to that coffee shop with a $2 in my pocket. I don't know that it's going to be $2.25. No one notified me that the price is going to change. So that causes a gap in the market, right? And then maybe I don't have that 25 cents. I can't buy a coffee. So I disrupt the efficiency of the market. And markets like to run on efficiency. It's an auction. They like to transact, get as much volume as they can at these psychological areas, at open balances, at closed balances. This is for psychological reasons, to hold trends and things like that, okay? And allow for pullbacks, entries, and things like that. But look at where we opened today. So the number is 3,689 closing opening price. It was initially bullish today. It drove up right up to here, 36.95. That's our high of the day, okay? So when we hit the high of the day, and guys, okay, did anybody do this, or is it, sorry, I have to talk here, okay? So remember this, look, yellow line and the all-time high, okay? I'm going to show you how mathematics works, okay? You can call me a mathematician. I'm a nobody here. I'm just showing you how to use your Fibonacci tool. This is a point of interest, right? Yesterday's closing price, today's opening price. This is not up for debate. That's where the candle closed, and that's where it opened. This is not up for debate. That wick is showing me the all-time high. Now, grab your Fibonacci tool and go from this yellow point of interest to the all-time high. Just go connect the dots. Connect this point to that point. And you see there is the 0.5 right up there, okay? See how close it was to tapping 50%? And look at the result, okay? So this is how I can show you the Fibonacci from a zone, from a line to a line, how accurate it is, okay? Again, if you want to catch that entire move, there's your control zone, right? And if we go backwards now, then it came into the control zone and it's below us. So that is a seller's control zone. It came right in there today. We can see it and rejected back out. So I'm going to stretch this and see if we can possibly, the buyers can come back up here and break this to take us to the all-time high and break out for a new high. So what happened up here? We came, that's the highest point of the day. Sellers came back to the opening balance and look at how strong selling pressure was today. This was a big black candle, bearish, took out yesterday's opening price, took out yesterday's low, continued bearish, came into 50% exactly right into the start of the week's volume, weekly analysis, very important, came in and it's respecting the weekly point of control, and buyers of gold are bringing it right back up, bringing it back up all the way where we are only 40 points away from coming back to the opening balance and only 50, 60 pips, flipping it to be a bullish hammer candle on the daily to continue to take out maybe the all-time high and drive even more, okay? That is a possibility. So another point of interest is right here. Closing balance, opening balance, yellow line. Okay, if we come all the way back down, bearish, maybe 36.77 is going to see some support. Maybe we come back up. If we can't hold here, then sellers could come right back down the wick. Now look at, guys, what I'm going to do. Okay, so this is where I didn't do this with you this morning. I'm doing it now because I see something right now. See this yellow line, point of interest, body closed, body open. They've already established this purple wick. Guess what I'm going to do? I'm going to find out exactly where 50% from this yellow to the purple line to the low is. What if it comes down and it stops and picks up a higher low and goes back up? Exactly where I'm going to pinpoint it. How do I do it? Fibonacci, yellow point of interest. The lowest point of the day is already established. There's 0.5, 3,669. Okay, right there. Another point of interest. Okay, because if we come back down bearish, and we can't hold this point of interest, then the candle is bearish. Maybe the buyers are now positioning themselves right there to buy, to continue to keep this thing going up without breaking. Maybe they want to put like a wall here so that it doesn't come back down to the lowest point of the day and break this weekly control zone. Makes sense, guys? Okay. I don't have time to list what all of these are, but I'll do that on another session. Okay, so we're almost at the opening balance. This is a bearish pin bar. It could come back down bearish. It could flip and turn in bullish. Okay, if we start breaking out new all-time high, just do psychological numbers. Okay, just go to 37.03, maybe 37.10. Like, it depends, all depends what you're looking for when you're trading. Okay, right there. Your other one would be 37.20, but I would go 37.25, right? 37.25, okay? If we continue to break out. Now, 4-hour candles. Now, let's speed it up. We can see the 4-hour candles came up. I can see when we hit the all-time high. We spoke about this this morning. Now we got 4-hour candles that have closed. Remember this one. This was a big one. This was coming, the European 4-hour candle came all the way down. Now we had a close on this 4-hour candle. So this was 6 a.m., 10 a.m., our session. Gold came down, made the low of the day. We have a broke out for high. It almost completely engulfed the previous European volume. Technically, it didn't. You see, if it engulfed, it would have closed above 37.79. 36.79, we were at 36.78. So technicals matter. It did not technically close above there. So can we figure out, I could do the same thing with this 4-hour candle. I could find my hourly point of interest. I'm a scalper, so I like finding hourly levels as well because I trade off of these. Okay, what it is just 50% of that candle body volume, or you could stick with your dailies, those 2 yellow lines, and just cut it in half. Okay, now I can see the 4-hour candle now from 10 to 2. So this is going to close in 56 minutes as soon as FOMC starts. Okay, so it just opened. It was initially bearish. Okay, it's got a shallow pullback. That's called a higher low. We're still above 50% of the candle. It built back up. So it filled the previous 6 a.m. wick. We filled this one all the way back from Tuesday, and we came all the way up to the opening price. Okay, that's the opening price, the O right there. So as soon as it got to that opening price, they've rejected it back down. So in 56 minutes, is this blue bullish volume going to close above here in order to build one more leg up to fill that wick and break out to the possible all-time high? Or are they already rejecting it down, and then starting with FOMC, we might get a bearish candle to start and drop back down. So if that's bullish on US dollar, we might see selling on gold. However, it's still got this strong 4-hour body. Okay, so now you can look at the overall pattern. It came up, one top, came down. We know that this is our point of control. There's our neckline, support, whatever you want to call it. This is the next leg coming back up. Okay, it's going to come stop right there at the opening price, and they're ready to drop it now. They maybe pinned the 4-hour candle, or is it going to come all the way back up to test the daily high or the all-time high? Okay, you can start to see anywhere in here could be like a double top, and then they could start dropping it down even further. Okay, so maybe they've decided to pin it right now, and that's a lower high, and now just keep offering to all of this buying volume and reverse this. However, if the buyers keep asking trade up here, we could open bullish and continue to drive out of here. So this 4-hour candle is going to close in 54 minutes. Okay, so we got to now move into the 1-hour. Now the 1-hour, we can clearly see there was 1 a.m., 2 a.m., that's pre-London. Here's London, come all the way down, 4 a.m., 5 a.m., 6 a.m. This is when we started our call earlier. Look at the right there, 50%. Look at the hourly candles, equal bottom lows, came back up, 7, 8 a.m. was Comex, closed below. It retraced. There's a fair value gap for all of you fair value traders right in there. See the 9 a.m. pullback. There's 9 a.m. pullback. The previous candle right there. You got a zone, wick to wick. If you're looking for that chunk of meat in that candle, like right here, guys, if we get pulled back in here, we could be looking to buy out of here. If you guys call these hourly fair value gaps, whatever you guys call them, you see how it's kind of just in between my yellow and my white line right in there, but there's the exact location. See how the pullback stopped right there and went back up? This high came in there, rejected back down. See that blue volume that just, nothing has touched that volume in there. It's still pending, right? So what I could do is take this white line, put it right 50% in that green hourly fair value gap, and place an alert right here. And I'm alerted. If it comes all the way back in there, could come in there, alert me, maybe it buys out of there. Okay, so that's how you can determine where are your gaps in the market, right? Just train your eyes to look for these things. There's the bearish fair value gap right in there. Okay, so see how the bearish inverted bullish. I know all of you guys, this is your ICT pattern. I watched a TikTok video for 1 minute and I understand ICT. I'm like, why do you got to explain it with all of this confusing shit? It's just coming down to the low of the day, it closes above and it retests and it goes. That's it. It's exactly what we've been doing here, teaching you from day one without using fancy words. But that's what it is there. If you don't believe me, grab your Fibonacci tool and measure that bearish candle right there. Watch, same zone. Look, I didn't even open, close. Right there. There's 0.5. There's your right there. There's your zone. So it came down. It came in here red. They pushed it down. Came in again. Pushed it down. Came in again. Right here, 8 a.m. COMEX closed above inversion zone. Okay, just change the color red to green and look at the pullback. Pull back in there. Retest and go right back up. Okay. So did you guys have that trade mapped out? Hopefully you guys did and caught that. Okay. Now we came up and we're struggling. So right here at the opening price, we cannot break above. They're pushing it down. Okay, so it's consolidating in between these yellow lines. Okay, it could get real funny, but are we going to make one more leg back up to come above the opening price, get up to the daily high, or we're not too far away from the all-time high, or are they going to continue to push this thing down and sell gold down? Okay, so I'm not going to dissect these hourly candles because we're going to have a lot of volatility. You know, I just want to watch more so the yellow line, this big red box, and maybe this green box down into here. Okay, see how close it is to that yellow line? So I just manipulate my zone myself. I just bring it right back down to that yellow line because the daily holds more weight. So I got a box down there, so just bring it down a few points. Okay, now going into the 5 minutes on gold. This is what we got going on. So there was a big move down, came all the way down. When you're watching 5 minutes, you can see how 5-minute candles react at these zones. Volume closing above, you had a retest there, another retest. And since then, making higher lows, higher highs, higher lows, higher highs. They kind of pinned, again, it came all the way back to the opening balance. And you're seeing the sellers now starting to push it right back down. So will it build at this yellow line? Will it build inside this hourly zone down here, or will it build all the way down to the lowest point of the day if we're going to continue to go up? Or are the sellers going to push it down when it gets to this yellow line? Maybe they close it below there, and when the buyers are buying it back up, they get rejected, and then it comes down into this deep zone, and then we'll see when it triggers all of those orders. Remember, it hasn't triggered any of these orders. We'll see what happens in there. Will it come up big time there, or will it just continue cut through there? Remember, with FOMC, it can cut through. You might see a 200 pip candle in 1 minute, right? So everything comes down to FOMC. If you're not trading, then just wait for bodies to close, okay? Just looking at 5-minute structure, there's a little bit of support still holding. I would keep it right there. About 50% of that blue candle, there's a body holding, body still holding. So you know when I'm looking for, when I'm trading on my 5 minutes, just below that red line are those 2 wicks. That's my 5-minute zone right there. If it can continue holding this, then that's when sometimes I look for scalp buys to come back up. But I know I'm counter trading some bearish candles here. So it could just come up a little bit halfway and then go back down. And then they break this, then it loses that support, and then it keeps dropping down to my next point of interest. Then if it keeps dropping down, we come down to this zone, okay? That's how I trade. I trade like a grid system. I trade like a map, right? Okay, so right now, this is how the volume is trading. You can see we're struggling right now at the opening price to continue to go higher. Okay, so just drawing a red zone to keep us understanding that that's where it got rejected, and it's at the opening day's balance. Okay, guys, what time is it? 1:11. Okay, so we have our daily bar indicator. I can add some EMAs on here, but sometimes it gets a little busy. But if you need EMAs, they're there. Okay, so the green one is your 9 EMA. The purple one is your 200 EMA. Okay, so gold is done. Gold will be on the right side of our charts. Okay, if I keep the daily bar, you know, it kind of takes some real estate off of the chart, but I'll keep it on there. This is what we can see with gold. Okay, if you're a gold trader, pay attention to your gold. Let's now do US30 and NASDAQ. Okay, so I'm going to go a little faster. I'm not going to, if you see me grab my Fibonacci tool and you see me figuring out points of controls, 50%, you guys know what I'm doing, okay? I don't want to keep explaining this over and over and over and over, okay? If you need review, you can watch any one of our videos over the last 6 years on YouTube, and I'm sure I'm talking about the same shit I talked about 5-6 years ago on these calls. Same thing. It's very repetitive. It's very boring, okay? Another way, okay, I know I go off topic, but you see how Wall Street opened today, like 925 bullish, close near the high, continued bullish, close right at the high, continued bullish, close right at the high. See those 3 candles? Those are called 3 soldiers, okay? 3 big bullish candles with any low pullbacks. This can be 3 days, 3 bullish days. It can be 3 strong 4 hours. It can be 3 strong 5 minutes. It can be 3 strong 1-minute candles, okay? When you're determining this is for beginners. If you don't know to determine that point of control, this point of control, or this point of control, here is a nugget for everybody. And if you don't know about this, this is where I would pay attention, okay? 3 means a lot in trading. Threes, triple tops, triple bottoms, 3 candles, like a 3-bar play. 3 means a lot in trading, okay? There's 3 bullish candles. They're called Marabuzzo candles. They open, they're ignited, and they close right at the high. If you don't know which one to figure out, 50% of this one, or this one, this is where I'm going to make everything easy for everyone. Grab your Fibonacci tool. If it's 3 solid candles like this, okay, go from the opening balance of all 3 of those candles and go to the closing balance, okay? So I'm figuring out the point of control of those 3 big body candles. It will give me the point of control and 50%. So same thing. If you look at your 0.5, it is right there, okay? It hasn't came in yet to 0.5, but it's came and traded in that point of control right there. Did you guys see that? I have a lot of nuggets to share with everybody, but if you guys are willing to learn, okay? So do you guys see that? I'm making this easy. If you don't understand, should I be doing it on that candle? Should I go do it on this one or this one? When you take a screenshot of this, if you guys don't understand what I mean by a Marabuzzo candle, maybe you've never heard that, that's a Japanese phrase, for a candle that opens basically ignited, bullish right here, closes. Look at how this candle closed right at the highest point with no wick, okay? The next one just tiny pullback. It's Wall Street volume. It's basically ignited, and it just popped that there is no wick. It's just continuing to drive. Look at where it drove. Look at how tiny the wick is. That's like 99.9% right at the high. Again, this candle basically kind of opened. There was a wick that printed because it's Wall Street volume. Sometimes they print and they go. You might see that because they're delayed on the charts. But it just basically opened, popped that, and then it started to stop. You see, it went up. Then I got a bearish candle. Then I got some indecision. Remember, we were trading this. We traded that. I traded that. I was up 50 pips and I didn't do anything. And then I got stopped out and lost 10 pips. But they came deeper down inside, deeper block, bigger buyers. Okay, so does that help, guys? Because I'm going to get rid of this, okay? Because I'm going to go on the daily. But that's one way, if you're trading Wall Street, you know, why it's important to wait for 15 minutes to close, okay? And then determine your zones. Yes, you might have to wait for it to come back in here at 10:15, okay? You might have to wait later this afternoon at 1 p.m. But I rather wait to get paid. I don't know about you guys. What's the point of trading if we're not going to wait for good trades? Let's let the volume come to us naturally. I know we scalp the markets and we try to make it entertaining for you guys because sometimes we only have a couple hours on a call. So you know, if we're just sitting waiting here, we're going to talk politics, right? Set alerts in these zones. I tell you guys every day, you don't have to sit at your computer literally all day. Set alerts here and let the volume come to you. And you might say, Ron, it came right to me. You know, I watched it, I bought out of here and I got profit. And I'm going to say, amazing. And let's look to do this again the next day. Does it always work like this? No, but it's got a good probability that if you know what you're doing, you can stay consistent and do the same easy routine every single day. Okay, I can attest to that, guys, and I'm a pretty honest person and I have a good soul. I'm not here to tell you guys, steer you guys in the wrong direction. If you guys know me, I'm telling you, a lot of you guys don't know me. For those of you that know me, no, I'm not here to play games with you guys. I'm here to actually help and hope that you guys learn this because I don't know how much longer I'm going to be here, like doing this on YouTube. I'm telling you guys the honest to God truth. We got more strikes from YouTube. They're trying to shut us down. I'm being as honest. I'm not saying this, you know, to play games with you guys. I'm telling you guys, they're trying to shut our channel down. You guys keep subscribing are helping the growth of it and to keep us going, to show that there is people that want to learn a financial education. We're not financial advisors. That's why they're trying to shut us down, because we're giving financial advice. That's why I tell you guys, I'm here for entertainment and education. I'm not your financial advisor. I'm not here to tell you guys where to put your, you know, risk man. These are things you need to learn. Do you guys understand where I'm coming from? Please, I need to know that you guys understand this, okay? Because it affects me on these live calls. I'm telling you the truth. It really does. I can't be myself anymore knowing that I can't really talk the shit that I really want to talk about. You know, I really want to expose the markets, but I got to bite my tongue because YouTube is telling me you got to watch what you're saying. And I'm telling YouTube to go fuck themselves. I want to say what I want to say, okay? It's free of speech. I'm helping people learn how to trade. What is so wrong with this? Why? There's more shit you can go on YouTube, and there's so much negative shit out there, but they let those channels slide. And us, we're trying to help people learn how to trade for free, and we're getting shit on. Like it's to the point where I cannot take this with YouTube. So I need to know that you guys are understanding how to figure out these zones, okay? I teach my kids this. My 9-year-old daughter knows how to do this. I'm sure you guys can learn this too. It's not difficult, guys, okay? So let's go to the daily now on this US 30, okay? Because this is Dow Jones. This is my security of choice. I love this security, okay? You can see there was gaps in the market. Look, it got filled just right in there. You can see a zone. Look how clean it looks. You do not need to make this shit complicated. Do you see there's a wick, a wick, a wick, a wick, a wick, a wick, and then there's wick and a wick right there. Train your eyes to just look at that zone right there. I will make it neutral so everyone can see what I'm looking at. Is this complicated, guys, to just figure out that wick, that wick, that wick, that wick, that wick? There's no volume that traded right in there. Trap that area. There was the big body candle that broke right out of here, but then look when it came back in, traded in there, wicks. Okay, so that is a zone. That's a zone. You figured it out. The volume is above. Just make it green to tell you that this is a demand zone, okay? So, and then now I can look now below the zone at points of interest. Right there. That's a point of interest. A body closed and a body opened right here, okay? And I can find another point of interest. If I'm a small-time scalper, there's a body, and a wick in there. I know it's not much for you guys because you guys are looking for bigger moves. I'm not. I'm looking to trade, scalp the markets for 20 pips, five scalps a day. I hit my goal of 100 pips. I'm happy and I'm out of these markets. Sometimes just a little fill right down to there, that's 100 pips. Pip and dip. Okay, but the bigger zone is right over there. Why? Because there was more price action that happened down in here. There's a wick. There's a wick. That's representing 50% of that big bullish candle. Then it's support. Support. Look how low it dropped, but look at where it closed at the yellow line. Look how low it dropped. Look at where it closed. Yellow line. Look where the next body candle opened. And it looks since then, you got a higher low, higher low, higher low, higher low, and a big body candle. We've already retraced in here, so we could be going one more time to test these all-time highs, or they're going to drop it and break this today with FOMC. Okay, so train your eyes, guys. Train exactly what to look for. Stop making this complicated, please. Some of you guys have been with us for years, and I say, Ron, I can't figure this out. So it's kind of really, you know, I got to get back on the webinars with you guys and make sure you guys are understanding this, okay? That's why we're having a webinar later tonight, so we can learn our toolbox, we can learn our indicators, and then we can go from there. I really want to help you guys with a system. Remember what we were talking about earlier this morning? A coach has a system. Winning coaches have, like, if you look at Phil Jackson, he had Michael Jordan, he had Scottie Pippen, he had some star players on that team, but it was his offense, triangle offense, all of these things, his defense. He brought in Rodman. He knew how to deal with Rodman. Not a lot of coaches know how to deal with Dennis Rodman. If you guys remember him back in the day, he's wild. He used to leave games, go to Las Vegas, gamble, and come back next day drunk to play. And it was okay with Phil Jackson because he was a coach. When Dennis Rodman came to play, he was getting 20 rebounds a game. I don't think Phil Jackson cared that he was hungover. He came in, and Dennis Rodman, he went to the boards, he did his shit, he did his work, and he clocked in and clocked out. And it worked great with Chicago Bulls, and that's why they won championships. Phil Jackson handled that system. When Phil Jackson left, then the team kind of dismantled. You know, it wasn't the same team. So we need, myself and Dave are coaches. We're here as coaches to help you guys. So we got to develop a system for you, overall system for trading. It's not just candlesticks. You guys got to understand what else there is. Someone was asking me earlier, is Ron consistent on a daily basis? I can say that I'm consistent for over the last 20 years. It took years of learning, but I know I'm a person that if I lose, like if I get stopped out, I lost a little bit of liquidity, but I know how much liquidity I am trading with. I know how much capital I'm trading with. I can come back in the markets. If I take a loss right now in FOMC, I know I can go a little lighter, but if I see it's developing same with my bias, I can start adding positions. Some of you guys, that's why I don't teach this, because some of you guys will say, well, Ron, you're revenge trading. How am I revenge trading? I'm testing out the market just like how banks do it. Banks don't just go all in, they test it out. They're going to test out the FOMC today. You think you're the only trader? You don't think banks and institutions are playing with these numbers and things like that? They're adding small positions. They leave. If a bank goes in drawdown, it knows how to pick up that liquidity at a later time. I know, I've learned over the years how to do that myself. Some of you guys might think I have like big losing days. I'm honestly telling you guys, I haven't had a big losing day in years. I know how much to risk each day where I'm not stressed out while I'm trading. That's how I can trade with you guys live, because I'm not stressed out while I'm trading. A lot of live traders don't last for more than a week, a month, a year. We've been here almost 6 years with you guys every single day. If we're not good at what we do, we wouldn't be growing our YouTube. It's simple as that. We're not begging you guys. We're here for free for you guys. We just ask you simply like and subscribe to the channel. And YouTube is coming down on us, not you guys. I love you guys. I want to be here every day with you guys, but we're having issues with YouTube, guys. I'm telling you. I don't know. I don't understand YouTube. I'm starting to learn how this shit works, but it's starting to really piss me off. And I'm not good when I get pissed off. Okay, so this is our all-time high up here. Okay, so, and we're not too far off of it. There is a little tiny zone you can see from the orange line to right there. There is those two bodies. Just that little zone, we have to acknowledge that in the market. Look at today, our high. We almost came in here, okay? Look at it. Is it just by reason why it didn't come in this little zone so far? Like, you're telling me this is just by chance that this happened? No, this is a specific reason why they do this, okay? This high wick, I'm sure that they knew what they were doing when it came up there. I'm sure that there was a big iceberg order of big seller, hidden in the market in there. Sometimes your depth of market, even if you have Bookmap, if you guys have your depth of market, if you guys have all that shit and you're paying for all of that, they're not going to show you exactly what's going on in there. I'm sorry to break this to you guys. I know what goes on behind the scenes, how these assholes trade. So we just got to use a little bit more common sense, guys. You can see how it came up. Look where I'm placing my purple line. So you're telling me just by chance it just came up there and just stopped from this little tiny zone up here? Come on. Who are you guys kidding? Okay, so we got to know that they placed that lower high. I can now bring that zone down, right down there. I'm manipulating it myself, okay? So this is where Ron is now the manipulator of the markets. I'm manipulating it. So I'm bringing it down to where I want to bring it down, not where someone is telling me to put it down. What I learned to do by watching candlesticks every single day for the last 20 years, guys. It's the same shit over and over and over. Now they're rejecting the move. Let's look at 50% of this big bearish bar right here. Grab your Fibonacci tool, opening price, closing price. Okay? Let's let the math do the work. 0.5 is where? Right there. Let's place a yellow line. Look at how it represented Monday's high. Tuesday we had a low right there, a lower, and now we got the volume right above there. Do we have a point of control? Yes, right there. We are trading in it right now. We can see we traded in it on Monday, rejected back out. We came in here yesterday, they rejected it back out. We blew past this trading today, but now it's getting rejected back in. Okay, so that is still in the market. If they continue absorbing, they could bring this bullish candle all the way down and shoot it through here. However, if it's still holding, you could see another squeeze to these short sellers here that are shorting the all-time high, and this could skyrocket out of here. Okay, there's a lot of US 30 traders that are trying to short this, like big hedge funds, institutions are loading up to. They're saying it's going to be the biggest market crash of our lifetime. I don't see a market crash, guys. I don't. I see it continuing to build up, and this is just another regular pattern where it came up, came back down, and now it's coming up. So now what I say is, will it come back up here and break out and cause a squeeze, or is it just going to come up here and be a double top, and then we're dropping back down, right? And then there's your M pattern, just like a traditional M pattern. Then we watch what happens down in here, okay? What time is it? 1:27. Okay, so now that's the daily. Let's go into I'm not done. So it opened. See, I haven't even done my opening balance right there. Opening. I know my low of the day is still trading. It held up in this green zone. So I came back to the opening balance. We're full of nice bullish volume. We made that high of the day. They were just shy of the all-time high, and it's coming down right in here. Okay. So that's what we got to watch for. We can break the daily now down. Now we're going to dissect it. 4-hour candles. Okay. So we were pushing down right up there. When we hit this all-time high, it was coming down on the 4 hours, came back up, lower high in that block. They pushed it back down, lower low, volume consolidated. We had a big bullish candle come out at 6 to 10 a.m. This was our earlier AM call. So we're going to analyze this candle, right? We're going to look. Now, if you want a 4-hour or hourly point of control, same thing. Look at that. That's a big abnormal bullish candle that closed above all of this structure, closed above our zone. So it closed above, right? So this zone, I'm going to make it green because it did close above. And I can see how it's trading. It opened. It was initially bullish, so we broke the. We got up to our daily high up here, and then it came back down, still holding and consolidating in here. Okay, so if I just want to place one white line, what I could do is, if I don't know what to do, yellow, yellow, we're right in the middle of those two yellow lines. But when you got a big bullish candle like this on a 4-hour, just determine where 50% is. I do anything I do on the 4H or 1H, I use a white line. 45,888 right in there. So if we come back down, that's telling us at that white line, that's exactly 50% of the big 4-hour New York candle from 6 to 10 a.m. So that's representing everything. Pre-New York, 6 a.m., 7 a.m. It's representing any 8:30 North American news. It's representing 30 minutes of Wall Street market open, closing at 10. Very bullish, okay? So now we're kind of just consolidating in here. Are we going to continue to fill up our wick and break out for a new all-time high? Or are they going to bring this back down and test down in here, okay? On the hourly, now we can literally see A8. Look, if you're an hourly trader, guys, see how it came down. There's the neckline came down. That's all a double bottom. There's your volume that closed above 8 a.m. You know, maybe we got to start looking at hourly candles too and not just go straight to the 5 minutes, because this is good stuff here. We can retrace right back down above 50% of this short wick. The hourly candle popped right through here. Sometimes when we're trading Wall Street right at 9:30, you know, it just pops. We're watching the 5-minute candles. But if you go back, or what, it's my job. My job is to go back and we'll review the hourly candle and then maybe develop a nice bias going forward on our New York calls. Okay, and then that shows the big bullish candle. Remember, all the way high there. Remember, we bought that first pullback on those 5 minutes. But here's now the hourly pullback, come back up, you know, continue. Then they just shut it down. So noon, big bearish candle coming back down. Now it opened, ignited in the green box, coming back up. So you see how it's now consolidating in the green box. Look at the hourly, it's showing us the neckline. It came up, back down. So we're in the neckline. So yes, FOMC could break out and it fills right back up and maybe takes it out, or it's going to continue to push down here. When it comes up here, then we drop back down, all the way down in here. So you see how the hourly candle has opened, bullish ignited, and it's still holding its opening price. We got 29 more minutes to go. We can watch where this hourly candle closes going into FOMC. So I'm not going to like dissect these because these could be easy candle fills with FOMC. You know, it could fill all the way up to there. You know, if you're just measuring moves, if you're in a buy straight from here to retest the daily highs, about 90 to 100 pips. If we go to the all-time high, you're up 140 pips. And then if there's a breakout, it could be 150, 200 pips that from this position going up there. However, if it sells down too, what if it's bearish and it breaks down here? Just coming back down to that hourly point of interest is 50 pips down in here. If it comes all the way back down to that daily, it's 150 pips. If we retest our lowest point of the day, 225 pips. Okay, so you can see that, and with the volume coming in on FOMC, it could be big moves. So you got to be thinking right now when you're trading stop losses, how much you're willing to risk. If you think you're going to get away with a 10, 20, 30 pip stop loss, you're going to get stopped out. It's no point in even trading unless you can nail an ignited candle and go directly into profit. If you can do that, that's fine. But for other traders that are thinking, I'm going to go in with a 30 pip stop loss, you might see a 100 pip candle, you know, just right out of the gate with this type of news. Okay, so that's hourly. Let's go into the 5 minutes. This is that. There's Wall Street. So Wall Street had that big move, 925. 930, 945. We're retesting that kind of zone. We came in here, held back up, got that new higher high, highest point of the day. So they just held it. That's how far it was from the all-time high. And then we came back down when noon, hourly momentum switch up. How many times have I told you guys? How many times have you guys watched me in a trade where, you know, I'm trading at this point, and I always say, guys, you know, hourly switch up. If we don't, and then look at noon, brought it all the way back down. Okay. And it came down to 1 p.m. Look, from 12 to 1, all the way from the top point to the bottom of our green zone. And there's 1 p.m. and 1 p.m. is slowly coming back up. But now you got some choppy consolidation. So, you know, the market could be waiting for Powell to break it out of here or to break it down in through here. If you want to gamble, some traders have sell stops and buy stops above and below these zones. But I've seen where it opens like this, will come up, trigger that, take you back down with a wick, trigger that, and then just trade inside here, and then finally, you know, redistribute after it's taken out everybody. Okay, we've seen those. You've seen choppy market opens. That's what they're doing. It's designed to do that. Okay, so now again, we'll just watch through here. Let this thing continue to build at our daily bar indicator, so we know, just in our back of our mind, we know we opened down here, we got the low already, came back to the opening price, we've been pushing bullish right there. Noon, we hit the highest point of the day, and now it's coming right back down, consolidating right in this zone. Okay, so that's what we got going on US 30. There's my 9 EMA, purple line, we're right at it, and 200 EMA is right below here. Okay, so these ones, we got two charts out of the way. We got to do NASDAQ, one more. So US 30 for all US 30 traders, Dow Jones, YM, all of you guys, this will be on the left side. We've got gold right over here on the right side. In the middle, we're going to put NASDAQ. Okay, so one more time, one more top-down analysis. We're going to do NASDAQ. Okay, so NASDAQ had a different open from Wall Street. Remember, US 30 was those three big bullish candles that just drove. Here's 930, 935. See how NASDAQ trades a little bit different. NASDAQ sold off while US 30 went up, okay? So they're not the same securities, nor is S&P. All of these are different indices. They're comprised of different securities, okay? So a lot of traders think that they move in tandem. They don't, okay? Some days they do, you can see, but don't just always use that. Just trade, just because US 30 is bullish and NASDAQ has to be bullish. I'm telling you right now, they are not correlated, okay? So NASDAQ, let's start off again on the daily. Okay, so on the daily, we can recognize this, okay? A top and a double top. Let's make it red. Okay, stretch it into the future. Now we closed above, end of June, we closed above. So that zone below us, make it green. It's suggesting that there could be buyers inside there. We're nowhere near that, but you know, if at some point it ever comes back down, maybe right in the middle, right in there, draw a yellow line. And if you have the trading view that allows you to add some alerts, add an alert, create it, and wait in there. Whether it comes back in here next week, next month, next year, at least when it comes down in there, you have a possibility of buying and getting paid. Buying with all of the pending orders that are patiently waiting to get filled down there, okay? Now, just looking at what's going on right now. So did we make an all-time high on NASDAQ? Yes, it did. Right up there, it was yesterday. 24,393, just under 400 is our all-time high. So this is this is an evening star pattern developing on the daily. This could be suggesting that selling is to come in the near future. A morning star pattern is where the sun is coming up, suggesting it's going to be a beautiful bright day, the morning star. So, but this is an evening star. This is the exact opposite 3-bar play. This is where you got a bullish candle and then you have this star that's hanging up above here. That's a star. That's a doji star. And then the next candle to finish off this 3-bar evening star pattern is a bearish engulfing candle. So watch, guys. I'm telling you guys, here's your clue for all of you swing traders out there. If this daily bearish candle off of FOMC closes below and engulfs, that could be the start of the bearish evening star and the selling in the near future to come. Okay. This is not financial advice. This is price action from a price action scalper who's self-taught on this shit. I have no license, and I'm not I didn't go to school to learn about this. I learned this right here in this chair in this basement, okay? So I'm making that clear for YouTube to understand I'm not a financial advisor. I went to university, they didn't teach me this. I worked in a financial institution, it didn't teach me this. This is self-taught, guys. This is like me getting together with you, going for a smoke, having a joint, having a beer, and me and you are having a conversation. This is me teaching you that, okay? So this is for YouTube. YouTube is listening, making it clear for YouTube. I'm not a financial advisor. This is all self-taught on the street right here, okay? So that's clear, guys. That's for YouTube because they're listening in on our conversation. It's like, I get pissed off when someone is spying and listening in on our conversation. That's what YouTube is doing, listening to every fucking word we say. And it's not a financial advice, okay? You guys understand that. I'm making it clear for YouTube. Okay, that's an evening star pattern, guys. The way how I trade this is, I watch below here to see if I have a bearish engulfing candle coming below here, closing below. Again, if it does, it just closes below. Then we pull back into 50% and then watch the swing continue to sell off. Okay, that's a possibility, but you need a few things to happen for that to be confirmed, okay? Now off of these daily candles, let's figure out some more pivots. Let's figure out some points of interest. Right there, it came up, pushed down. Okay, just look for pivots. It came up, bodies, pushed down. Came back, right there, it held, pivot, and pushed right back up. So when I'm recognizing pivots, I'm also recognizing points of interest on the daily. Right there's another one. It pushed up. That was a previous all-time high. But look where body closed, body open, body below. Then this yellow line becomes a resistance and to push back down. Now, when we're figuring out zones, real easy. Train your eyes to look at this. There's a pivot point, but you got a wick, a wick, a wick, a wick. Anytime you see 2, 3, 4, 5 wicks, train your eyes to look for a zone below. And if you can see the body, right there, body of volume, right there, and then you stretch it across and you see that wick and that wick and that wick come in there, and you stretch it across again and you see that wick exactly in there, you've now, congratulations, you have now discovered a zone in the market. Okay, real easy. You don't need someone to pay, you don't have to pay $1,000 to learn this. You just learned it right now live. Okay, so right there, you see how you train your eyes to see that, right? Stretch it into the future. If it ever comes back in there, you could be buying with these guys, these guys, these guys, and these guys. They're leaving a footprint behind. Okay, you can see now. We can see in there. It came in there. Those were buyers that bought it up. Came in there a second time, buyers bought it up. Came in a third time, 3 times it fueled up, and then that started that bullish leg. Another time it came back in there one more time to test this area, and those buyers said, we're still here. We're still here. We're not moving anywhere. We're pending in here. And look at the results of it, taking it right back up to the all-time highs. So that's where, guys, if you go back and you look at news, I follow a lot of news. September 2nd was the day after the US Bank Labor Day holiday. That's when they said the markets were going to crash. You know what they were hoping for? They were hoping for this bearish day candle to close below here to crash the market. And guess what? The buyers said, fuck you. We're in here, we're pending, and we're getting filled. Okay? And then that's taking it to the all-time high. I'm not a financial advisor, and we're not market makers. Someone said, Ron, are you guys market makers? No, we're not. No, we're not. We just understand how to find a box in the market. Okay, that's what this is, finding a box and trading with the box. Okay, it's a green box, we look for buys. If it's a red box, we look for sells. Very simple. Okay, sorry for me shouting, but I'm really pissed off with YouTube right now. Okay, because I'm sick and tired of doing something good for people and they keep trying to shut us down. I'm getting tired of I got to prove myself. I got to show them chat. I got to show them what do you call it? Screenshots of the chats and clips of our live video of what I said and this and that. And I'm getting sick and tired of this. That's why I'm getting stressed out with this YouTube shit right now. But I got to deal with this, guys. You don't have to. I'll deal with it. So we have a strong bullish candle right here. Monday, start of the week. Again, guys, start of the week, Mondays, Fridays, repeat themselves over and over and over, okay? So you got to know when a weekly candle opens up, there's a reason why it opened up here, and there's a reason why it closed there, okay? If you don't want to go into the rabbit hole of why this happens, who gives a shit? You don't need to learn that. That's a little bit more advanced. All you got to do as a retail trader is pinpoint where's the 50% and the box. Just keep it like that. You don't need to go into the rabbit hole and figure out why this shit happens unless you want to really, really take your trading to the next level and learn more about behind the scenes how markets work. And if you want to learn that, I'm more than happy to teach that shit too. I've been going after market makers for my entire life since I was 16 years old, and I'm 43 now, and I'm going after them with a lot of momentum now. And I hope you guys want to join and have some fun too with us. Retail traders should unite and have fun together. We should grow together. We should learn together, right? I'm not taking money from your pocket. You're not taking money from my pocket. We're getting money from the financial institutions. We're getting money from the hedge funds. We're getting money from the big banks. We're getting money from the big greedy corporations. That's what we're doing. If you guys want to be part of that journey, hit the like button and subscribe to this channel and show YouTube that this is what you guys want, right? I'm tired of telling YouTube this is what people want. You guys now, you guys are in control of this YouTube channel, not myself and Dave anymore. You guys literally hold the future of this channel. If you guys want to, we're here every day. We're in here working with you guys, putting in our time every single day. If you guys want to continue, you guys can tell YouTube that we want this, right? So hopefully you guys do. You guys are learning and growing with us. Now let's look at today's daily volume. There's, like, see this yellow line? I put it there for a specific reason. We closed here on Monday. We look at how crazy Tuesday was. It opened, hit the all-time high, came back down. Look at where it closed. You're telling me 24 hours of volume trading closed at that same location, exactly right there? Come on. And then where it opened right there, I can see today's highest point. Okay, it's a lower high, purple line. They've rejected it down during, most of this was all Wall Street. So they've been pushing it down, pushing it down, pushing it down. That's our lowest point. It is still technically a higher low from all of this. And it's coming right back up. And look, it's trading again, right back in that zone. So they pulled some liquidity from down here. And this could continue coming back up and skyrocketing out of here if the markets really rally. If it comes down bearish, you're going to see they're going to fill this wick, break the low and drop it. Look at, there's a little fair value gap on the daily. There's a wick and a wick. I can tell you guys right now, if it sells off, it's high probability it's going to sell right inside there. Okay, see how I figured that out? I can do it on a daily. I can do it on 5 minutes. There's a wick, body of volume has not been tapped. There it is below us. Okay, just for a safety, just for like a safety net right there, we do have to also watch this area too, because a physical body candle closed and opened right there. So I want to, if it comes down there, maybe they protect it from coming in there. Maybe they make it force a higher low right there, but that's good to acknowledge if it does come down into there. Okay. You see how I just did that one with a wick and wick? I could have done it with my style anyways with the Fibonacci. Just go from the opening price to the closing price, and it's the same exact zone, just a little smaller right there. That would be it. Okay. But there's two styles of doing it. You pick whichever style, whoever taught you, do it your style. Just, but more so than just doing it, understand why we do this. Understand the reasoning behind why pending orders are waiting and have not been initiated, have not been transacted. That will take you a little bit further than just, plotting a zone. Know what's happening. Okay. So, man, let's go to the 4-hour quickly. Okay, so we see NASDAQ strong market. We hit the all-time high Tuesday, 2 a.m. and then it came back down Tuesday. This was our candle. We traded live 6 to 10 a.m. We look at consolidation. Then it started to move. This is Europe. Okay, Europe came up, high of the day right there, closed. Then we started coming down in New York, 6 to 10 a.m. and then starting, look at 10 a.m. So you can see like bearish ignited 4-hour candles as well. It closed right there. This one was pretty much ignited. Tiny wick, but still pushing down, pushing down, pushing down. We got to the lowest point of the day, and this 4-hour candle is closing in 14 minutes when they release the news, and it's coming right back up to exactly that daily position and 50% of this zone. So, it could continue to go back up. If we want to draw a white line just to give us scalpers a little heads up, there's a 4-hour candle, and I would cut that in half. If we're scalping up there, you got to know that 24,250 is an important area in the markets. Okay, guys? So look at the 4-hour candles. Now, pattern recognition. Okay, it came up. We're coming right back down. Okay, so it made the lowest point of the day. I would say that this green box is the neckline right here, right at the line. So we could definitely come back up, but we got to push against all of this selling volume and flip the candle. If we do, we could be retesting right there. That's why I placed that yellow line, white line for scalpers. We could be coming in there. Yes, it could try back up for that daily price or maybe the highest point of the day. Okay, and if it even comes up there, it's nice, it's bullish, but it could come up there and then they knock it down, and then that's the lower high. They're protecting the all-time high, and then they're dropping it back down and break that box, and then we come in down in there. Then there's your move, you know, like an M pattern with the lower high shoulder. You see those wick, and a wick? Again, that's zone recognition. What do you think I'm going to do there? Go to the purple line, to the white line, draw a zone. See how I can guys, smoke weed if you have to. Smoke, and YouTube also said to me, Ron, you talk about cannabis. I don't give a fuck if I talk about cannabis. I smoked cannabis for over 20 years. It's legal in the country of Canada. They're going to tell me, Ron, you can't talk about cannabis? Are you fucking kidding me? Do they know who they're talking to? Oh my God. That's like telling Snoop Dogg he can't talk about cannabis. Oh, that's the shit that was funny. I'll show you guys screenshots of what we hear from YouTube. It's unbelievable. Like, I'm a grown man. I'm 43 years old, and they're going to tell me what I can do as an adult. Are you kidding me? Like, is this what we've gotten to on YouTube? This is the surveillance we have, the cannabis police out here. Come on. Okay, so you see how there's a zone right there. You can see a wick, a wick, a wick, a wick, a wick. 5 wicks in there. You got a zone. That's going to be the shoulder, guys. If we do retest this, I can tell you that's going to be a lower high shoulder. They're going to prevent it from going to the all-time high, and that's where they're going to look to drop it and trap a lot of buyers. I'm a nobody, but I'm just saying. And then on the 1 hours, you can see how we traded in there for multiple hours. They pushed it down when Wall Street, 9 a.m., 10 a.m., and now we're coming right back up, building a little bit in anticipation of Powell. It could come back down. It could go back up, okay? So let's see. We're 10 minutes away from FOMC. This is NASDAQ. You guys pick your securities of choice. I will add the daily bar indicator. You know we opened. You know we came to the highest point of the day. We pushed all the way down to the lowest point of the day just now, like right now on this call. And now it's starting to get a little bit of a wick. But we're trading inside here. So they could just continue selling this off. That's what I'm thinking. When everyone asks me, Ron, what's your bias? My bias has been the same bias all week. I'm telling you that it could be a buy the rumor, sell the news event. If you guys don't know what I mean by that, it's simply the market has already baked in a 0.25% decrease from when Powell was speaking at the conference at the Jackson Hole Symposium. So the markets rallied to all-time highs, continuing to break highs. So then now when he officially announces a 0.25% decrease, the markets can sell off. But they've already gone to the highest points. So even if it looks like it's a dramatic sell-off, it's just a natural pullback, and it allows investors, bigwigs, banks, and to realize their profits, cool down the market a little bit, and then bring it back down to buy it back up. Like, it's the same shit over and over. Like, you know when the history repeats itself over and over and over? Same stuff. That's my bias. However, it's just a bias. I'm not betting the farm on that, because I know that the markets maybe they've already trying to trick us, right? They've already sold the market down already from New York, cooled it off, and we all think it's going to be the buy the rumor, sell the news event, right? You got to think you got to always think in a game of chess, you got to be able to move a piece before your opponent. That's how you win chess. I'm not a chess player, but I'm learning. But this is me playing chess. I have my bias, but I can already see that NASDAQ already sold off already, right? So maybe they're now accumulating to pump the shit out of this as soon as they announce the 0.25% decrease. That's how normal markets work. When you have a decrease, it shoots up the stock market. So keep that in the back of your mind as well, guys, okay? NASDAQ has already sold off significantly from Wall Street. So maybe they're now accumulating it. As soon as they say 0.25% decrease, it could be a pump in the market, right? So again, trade candle by candle. If you have your own bias, I just presented you with 2 options. What could happen? You go with the bias that suits you, and go with the security that you trade. You can see how things are going to get busy now, okay? We've got US 30 on the left. We have NASDAQ in the middle. I know I have the daily bar indicator, so it kind of takes a little bit of real estate, but NASDAQ is right in the middle. And then we have gold over here, okay? So I need to catch my breath. I need to grab something to drink here. Are we all good, guys? If everyone can hit the likes on YouTube, we do appreciate you guys. There's a free Telegram channel that it's pinned at the top of the channel for you guys. If you guys want to join it, you can join it right now. There's 600 viewers. Hit the likes buttons and, you know, join us. Hit the subscribe button. You guys are the reason why we're still here and we still keep on ticking. Our goal is to get this to 100,000. We want to help 100 traders, 100,000 traders around the world and keep growing together, okay? Look at our uptrend. Starting of August. You know, when we took a little bit serious here, we're moving up, all-time high, pullback, new all-time high, pullback, new all-time high, pullback. Pullbacks are the weekends when we're not doing anything and we're continuing. YouTube thinks that we're going to dump this. No. It doesn't work like that. It doesn't work like that. We're going to constantly be here with you guys as long as you guys enjoy what we do, okay? Now, let's get focused now. Everyone, if you can please look at your trading platform. Pick what security you're going to be trading, because this is not the time to be choosing, I'm choosing gold, I'm choosing NASDAQ, I'm choosing US30, I'm doing this, I'm doing that. This is now where you have to have some sort of system or a plan, okay? So I personally am looking at gold and US30. I'll analyze NASDAQ, but it's not my favorite, okay? So when I'm looking now at spreads, I'm looking at gold. Right now, it's 2.1 for me. That's a high spread. My US30 is always fixed at 1.2, and my NASDAQ is fixed at 0.8, okay? I trade Forex over here with my real money. I'm not trading futures or prop firm accounts. Just want to make that clear to everybody right now. So please look at your sizing. Please, let's not have anyone on this call. YouTube and Zoom make a critical mistake because it could do. So like I was trading earlier this morning with one size. Do I want to trade with that same size right now? So this is the time to review, right? If you got a 0.2 and you accidentally hit 2.0, that could be a dramatic, it could blow your account. When you're trading a 0.2, it might be $2 per pip, and then you put in accidentally 2.0, it could be $20 per pip. So if it goes the wrong way, you could have a blown account or a really shitty day in the markets, okay? And it's a simple fix. So these are mental errors. Fix those, guys, please. You know, this is like you going to your job every day. I don't tell you how to do your job every day. You just know how to do your job every day. This is part of a job for traders every single day, is to stop making these mental mistakes. Keep telling yourself, reminding yourself, okay? You shouldn't be trading in these markets 5, 10, 15 years and still making these silly mistakes, okay? It's a time to stop this, guys. But I know someone is going to make a mistake on this call. I know it happens. We're all humans. But just please, that's why I remind you guys of this, okay? Okay. So markets will make a move prior to even the announcement, okay? And also, are you in a trade prior to this? Are you not in a trade? Do you have some sort of rules? Are you waiting for first 5-minute candle? Are you waiting for a 15-minute candle? Maybe some of you guys might wait the entire 30 minutes, see how the market moves, and wait for Powell. Again, are you looking for just a scalp in and out, a pip and dip? Are you looking to hold? All of these things. Lots to consider. I take it candle by candle. That's the way how I live my life. I take it one candle at a time. You know, I don't know what's going to happen 10, 20, 30 years from now. I know what's going to happen. I plan my life every 5 minutes. Okay. That's how I go about life. I scalp life, compound every day, learn knowledge every day, and continue teaching others, what we've learned as well along our journey. So hopefully it helps. I'm not nervous. I've had a lot of coffee. Okay, I'm on my 3rd coffee. I am wired on caffeine right now. Okay, but I will calm down. But but it's a lot of coffee. Okay. If I had some time, I would go out and smoke a joint right now. But we can't do that because we're about 3 minutes away here. Okay. So get ready, guys. You can see we are 3 minutes and 45 seconds away from this, okay? And Good luck, everyone. Okay. Good luck to everybody. Let's see what happens. About 90%, it's going to be 0.25 basis cut. There's about a 5 to 10% chance of 50 points, and there's also a 1% chance of a pause. If there's a pause, all hell is going to break loose. I think Donald Trump is going to go after Powell. And then we're going to see some real drama. And guys, you know, I hate to be the one with the bad news, but someone on this call is going to blow up their account, blow up a prop firm, do something stupid, gambling. If you're going to do it, I don't care anymore. I'm at the point where if you do it, you do it. It's your account, not mine. Okay? I'm not doing it. I'm sure a lot of snipers in our group are not doing it. Those days are over. Maybe if you want to have a gambling account, make one account strictly for gambling. That's your gambling account. Okay? When you feel like gambling, go to that account. When you're on a compounding account and you want to learn how to grow an account, don't be gambling, because one silly mistake can ruin months and years of hard work. If you're willing to risk all your hard work just for this event, you're crazy. Okay, so, you know, they're already building it up. Like, it looks like it wants to be bullish and break out of here. US 30. It looks like gold is already at a double top, you know, but this is insignificant for how much volume will be coming into the markets. You might have to increase your stop loss, right? So then start to learn to take a smaller size position if you want to give it some room to breathe. So let's see what's going to happen here. Good luck to everyone, okay? And a reminder for everyone in Zoom, we're going to have a 7 p.m. live webinar going over our toolbox on TradingView, learning about some indicators, and then we'll wrap it up at 9 so we can get some rest, so we can be back tomorrow morning to really dissect post FOMC and see how New York is trading tomorrow for a 6 a.m. to 10 a.m. session. Okay, guys? But we got one more minute, okay? You might see some craziness, right? You can always sit back, relax, and wait for bodies to close. However, if you want to trade, good luck, okay? 60 seconds to mayhem. Oh my goodness. And then, guys, just a reminder, around 2:20, if someone can provide a link for the Powell conference, we can listen to it live together, okay? Here we go, 40 seconds. Again, watch the momentum. I always say the last 30 seconds of a candle shows momentum. However, there could be some manipulation out there, okay? Markets are manipulated a little bit. That's how they operate. They don't tell us what they're doing. We're the last to find out. They already know what they're doing even before this news. I'm sure that they front-loaded positions. Us, we're the dumb retail. Let's see. Let's follow this. Here's the close. Again, please watch your security, okay? Okay, bullish dollar. They dumped the dollar, fake out, okay? So they fake the dollar out. Market is pumping and gold is pumping. Holy my goodness. Wow, okay? The dollar just went off of my chart on my other screen. Oh my God, they dumped it. Wow, okay? So they built that up. Again, that's why I put that white line for NASDAQ. US 30, holy shit, new all-time high. Gold came right into that red zone, okay, 3,700 red zone. They rejected it back down. This is volatility. I haven't even seen, what are we at? Quarter basis point, 4.25, okay? So that was assumed in the market. Let's see. Are they coming up here to spike all that liquidity and then sell the news? Possibility. There it is, okay? Look at gold now. Now the markets, you see. So let's see. Did they take out the liquidity of the all-time high and going to reverse this? Okay? Watch now. This could be the buy the rumor, sell the news account. Jay, you just blew your account, your whole account. I'm sorry to hear that. But I told you someone is going to blow their account on this call. It happens every time, guys. So, I try to warn you guys, but, we've got some gamblers in the group. See, look at this. Look at the range. Like, let's just wait for this 5-minute candle to close. It's crazy right now. I don't want to trade this. Let the markets deal with this. Let's just wait for this body to close. Right now, they're just liquidating. They're taking orders and they're waiting for Powell. Okay, like look at that gold candle. They've swept everything. They swept the high and they swept the low. And look at where it's trading, right back in here. Forget this. You're welcome if you guys want to participate in that price action on gold. I'm not. I'll watch the closing volume. So everyone's stop orders got hunted down there. Stop orders got hunted up there. Unless you reacted quickly and you know how to pip and dip out of news. Wow. Okay. So is anyone surprised? Is anyone surprised? Like, is this surprising to anybody? Or, wow, look at the gold. Unbelievable range. Holy shit. Okay, let's see. Who knows? Maybe the markets are going to continue pushing. Maybe it will close above the all-time high. We might flip this green. Maybe catch a pullback buy. I know it's crazy, but maybe catch a pullback buy driving for new all-time highs. However, we got to watch. Maybe they'll fake it out, close, and bring it back down. I am in no position right now. All I'm watching is this massive bullish candle on US 30. Okay. It is a fast candle. It is very, 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 very fast. And spreads, if you're trading spreads, slippage, it's not easy to trade news. Okay, so NASDAQ, coming right back up. We'll watch where it closes. 1 more minute and 15 seconds to go into the close. Trevor, 228 pips in 2 seconds. Yeah, I told you. Maybe we'll see a 100 pip candle in a few seconds. We've seen 200 plus. So maybe that's what happened. Like when we review it, they sold it down a little bit and then rocketing it out of here. Maybe they'll bring it down with Powell, when he talks. However, Powell could continue pumping these markets and continue their driving. Okay, look at gold. Okay, so it swept everything below. Okay, when you talk about a liquidity grab, that's a liquidity grab. Swept everything. Basically, all of the volume traded from 7 a.m. Eastern, took out the low. Now we just got to watch for volume to close, where it will close. And maybe gold will continue breaking through here. Have your levels, 37.10, 37.20, 37.25, following this. Here's the close of the candle. So I'm going to assume it's closing above there. Green. NASDAQ hasn't closed. I'm just going to get rid of this tiny zone here. Okay, so if I'm looking for pullback buys, maybe I'd like to buy the previous all-time high. If it comes all the way back down here on US 30, I could be looking to buy back down in there, or I could be looking to sell below there. NASDAQ is retesting, and gold could be continuing to hold and build for that new daily, not too far away from that all-time high. Okay, should we be trading now? Should we get in? Right, that's up to you. If you want to wait for pullbacks, right, it's better to get a discounted buy somewhere in here, down there, but I don't think the market sometimes doesn't want to come down. We were waiting for pullback buys in Wall Street this morning for US 30. It didn't naturally pull back right away. It took some time. Okay, so you got to decide. Like, if you want to trade this candle, what's your goal? What's your plan? How many pips are you looking to take out of the market? Because I don't know if it's just gonna go straight up forever. Like, you got to have some sort of plan. Where will you be placing your stop loss? Measure the distance so you can calculate in your head because this is big volume now. So just for example, you know, if somebody bought that candle as it opened and their stop loss is just below here, that's 150 pip stop loss, not 20, not 30. Okay, so you can see that you really have to open it up. Okay, and then if I look where 50% of that big bullish candle is, it's our zone that we have right here. Okay, so it's right at the zone. NASDAQ coming back down bearish. Gold, let's see if it gets rejected. Maybe we'll sell back down, or it can physically break above here and close above here. Look at NASDAQ, okay? So it came all the way up. Now it's bearish all the way back down, okay? We're still trading below this red zone, above this green zone. To me, this is still, the market is consolidating. I know some of you guys like to scalp candles. Believe me, I love scalping candles myself, but the market is just, NASDAQ is just continuing to stay in here consolidating. We could wait for the full 15-minute candle to close as well. You know, the 15-minute candle on gold is wild. There's the 15-minute candle on NASDAQ. Here's the bullish ignited open 15-minute candle on Dow that we can maybe wait for. I know these events are very exciting and everybody loves trading these, but you know, you don't have to go crazy with these. Okay, so gold coming back up. Will it attempt to break out of there, close above there? It's only about 50 pips away from that all-time high orange line. Is anyone in a trade right now? Have you guys taken anything? Would you like to share? Are you guys in anything? In profit, in drawdown, whatever it is, it's all good. I'm a trader. I understand. Some of you guys might be in profit. Some of you guys could be in drawdown. Some of you guys are not in a trade. I understand trading, guys. I know how it works. But myself, I'm just waiting. I know it's not the things that you guys want on YouTube, but there's nothing wrong with waiting. I'm curious to see what Powell's going to say. Okay, I know this is fun, volume, and exciting, but I'm thinking about trading tomorrow. I'm thinking about trading Friday. I'm thinking that I'm going to be a trader next week. I want to be a trader the next month. Hopefully I can stick around till 2026 and continue trading. So that's how you guys should be looking at the markets too. You guys don't want to blow your account because you guys might miss out on some amazing volume tomorrow. You guys might miss out on the best trading volume next week. You guys might miss out on the best October, November Santa Claus rally of your entire lifetime. Like, I don't want to jeopardize my account when, okay, it's fun right now, it's moving, but tomorrow could be good too. Saying you're here watching my beautiful hair, thank you. I try to keep it looking nice for you guys. It's a lot of work to, believe it or not, to keep this majestic hairstyle. It's a lot of work. Okay, look at that. New all-time high. Okay, so we got some closing volume. Let's just go through the motions. Closing volume above that red zone. So this could be a pullback buy area if gold comes back down. If you're looking for a discounted buy, could pull back in there and maybe catch a buy out of there. Maybe it just pulls back and wants to continue to go. So if you're in buys on gold, I would focus on 37.10. 37.25 is a big one. You know, 37.20 as well. Go $10 increments, you know, with this type of volume. If you're smaller scalper, you could be looking at $5 moves, but have heavy focus on any trader at 7.25 and 7.50 if it gets up there, okay? Ramon, nice. 4-hour breakout on gold. Yep. Okay, so we found a little bit of 5-minute resistance at those bodies. Okay. We do have a new all-time high right up there at 257. Okay, so are we going to retrace back down into here? Are they holding it? This is very, very, very similar to the trade I took in Wall Street. If you guys remember, I waited for a little bit of a pullback. I placed my stop loss below that zone. It did come back up, but remember, it wouldn't break out of here. It was going up 50 pips, and then it came back down. Then I took my stop loss, and then I went basically to break even, and then it broke out, and I said I was silly for not taking out anything. So this is very, very similar to the exact setup in Wall Street. So maybe it will come back deeper down in here and allow for a better entry, unless you want to play around in this zone up here, okay? NASDAQ is breaking down. Will it close below here? And that's it. Maybe it will come down and then maybe sell and take out that lowest point of the day and drop down. And then Powell will be coming very, very soon in the next 18 minutes, okay? Gold is retracing back down all the way down into there. So let's see, will it catch a wick, get some respect in that green box? Will it make its way back up, or is it going to lose that zone down in there? Okay, so for gold, okay, so this is coming back down to maybe attempt for a retest inside here. However, it could maybe drop a little further to that daily line right there, okay? Now we're getting a pullback on US 30. Why did the US dollar drop on the news? A rate cut is you're cutting rates. So you're making your dollar cheaper for borrowing costs. You want to attract investors, so they want to come in and buy it when it's cheaper. They don't want to invest when it's high. So, you know, they could be bringing the dollar down for foreign investment at a reduced interest rate and, you know, then come up later, right? Okay, so NASDAQ pushing down. So hopefully, guys, you know, those were fun big blue candles. Hopefully you guys did something. You didn't get too greedy, because things go up and they can be elevators coming down. Okay, unfortunately, that's what happens in the market. U.S. interest rate futures price in 94% chance of a Fed cut in October, after Fed's statement was 71.6 just before. So now you see the statements are coming out, the economic projections. Remember those other red folders? So allow me to just read this for you guys real quick. Fed policymakers see 4.5% unemployment rate at end of 2025 versus the 4.5 in June projections. Fed officials' median view of the Fed funds rate at end of 2028 is 3.1%. That's a big projection. Fed projections show one policymaker estimated the appropriate policy rate for year end at 4.25 to 4.5. One saw it at 2.75 to 3%. Wow. Okay. Fed policymakers see 1.6% GDP growth in 2025 versus the 1.4% in earlier June. Traders add to bets on at least one more Fed cut rate this year. So we have another Fed FOMC coming up in October of this year. Fed downside risks to employment have risen. And finally, the U.S. interest rate futures price in a 94% chance already of a Fed cut in October. Okay, so that's why we got to listen to Powell. You know, this could be the sell the news event. Okay, so they pumped it out of there, new all-time highs, grab some liquidity. We're back below here, so just convert your zones now. See, guys, this is why sometimes when I go on to 3 charts and I stretch into the future, it's hard for me to select this. Sorry. Okay, so I could be waiting for a pullback sell in this block. It's dropping. Will it come back up and go back down? NASDAQ, red below there. Gold, red below here. Testing in there. This could be a quick scalp buy, a very, very quick scalp buy. It tested in there, it could flip and just drive right back up to that red box. It's that, yeah, right there, kind of when it flips. You know, if you're looking for a quick scalp, oh my God, I was about to just pull this trigger real quick on US 30, but I don't think you guys are ready for this type of scalping this fast. So got to wait for maybe a little bit more concrete evidence, but I got some ants in my pants. So I want to trade. Okay, so it's holding a little bit of support inside here. Okay, so I'm just marking zones. I'm going to trade on bigger zones. Okay, so we'll see, can it come in here? Will it break out, come in here, sell back down? Just focusing on the zones, the red and the green so far. It's 2:16. If anyone has a link in the Zoom chat for me for Powell's live event, maybe we can put it up soon and make sure that everyone can hear Powell or the speech coming in, because maybe it's nice to listen while we're watching the price action. So on the news, the US dollar dropped significantly. Okay, now it's kind of consolidating. Powell is going to step into the markets now at 2:30, and he's going to talk. Is he going to say good things that will increase the demand for the US dollar? Possibly, and then we might see a retracement back up from the original selling from when they released the numbers. That was a nice candle. Like, that's what I mean. Sometimes when you look at those scalp candles, when it tests that and it breaks back up, it was that pin bar. Sometimes buying and then just taking it right up there. Okay. Normally that's how I scalp the markets, and just take it right up there. That's a 50-point move in and out. I don't even know if I would have kept 80% in, just open close, but I know it's quick. It's very quick. That's why I didn't take it, because I know it's very quick. And you guys will say, Ron, I didn't have time to even enter into that, because I know it's FOMC, things are moving fast. But as a scalper, that's exactly what I'm looking for. That 1 minute candle that kind of came out of there, went pushed up, and then right there, filled right up to that. You know, you got to be very disciplined. But that's why I didn't take it, because I know it's fast. Okay, so I'm waiting for more solid evidence here. Bronson, is that a link? Let's see. Can you guys hear? Can you guys hear this fancy music in the background? YouTube, can you guys hear this? Zoom, you guys can hear it? Bilal, you can hear it? YouTube, yes? Okay. Okay, so we'll leave this in the background. We've got some beautiful trading music. Nice soothing music. You guys want me to turn the music off? Or are you guys okay with this? Turn the volume down a bit. Yeah, we might get a copyright claim because I'm using this. Again, there might be another strike from YouTube in the email box. I'm not sure why. It's available on YouTube, and we're on YouTube, and we're playing the link. I like US30 how it's building, guys. You know, I want to see like maybe a position to break out of this red zone. So if it can kind of pick up a little bit of support right here, let's see if it can barcode in here, pick up a higher low, maybe attempt to trade into this red zone, continue its bullish leg, see if we can come back up, or they're going to come back down, and then a better buying opportunity would be deeper down into here. Maybe the market will push up with Powell. It's pushing down for 10 more minutes when he comes back to the stage. Okay, but I'm also watching that higher low wick. Okay, they're pushing it down. Will it take out that low or get a higher low? Fed projections imply additional 50 basis points of rate cuts in 2025, 25 basis points more in 2026, and 25 basis points more in 2027. Wow. So they're projecting a lot of rate cuts to come remainder of this year into 2026 and 2027. Remember, these are just projections, okay? They can say this now, and then tomorrow they change their minds. due to employment numbers, tariffs, job numbers, all kinds of things. So these are just projections, just like they have a bias, you have a bias. This is not concrete information. I wouldn't bet the farm on this. These guys are all full of shit too. All of these chairpersons, they're all government workers. They're all full of shit. They're all of them. I lump them all together. These Fed Reserve chairpersons. You know, Powell, I love him. He's Papa Powell, but still, you know, he does what he's told. All of these guys, they're all in it together, guys. They make money. Check out Nancy Pelosi's balance sheet, how much she's made. Have a look. Okay, good bullish candle coming up. I like this to maybe cut through here. I'm going to go in and buy. I'm going to test this out, see a nice little quick maybe buy prior to Powell. Okay, I got some ants in my pants. I want to see if maybe we can cut through this red zone, about 50 pips to come to the top, and maybe just see what happens. Okay, I like the retest. I like those wicks. Okay, you know, this could be just a short scalp, just coming in. I'd like to see back to that previous all-time high orange line, just to fill this zone. I know it's couldn't get a wick right at 50%. I'm a big proponent of that 50% there, but want to see if maybe if it's got a little bit of juice to continue to drive prior to Powell. Okay, so up there is about the highest point of the candle from where I entered. I know it says 36. Maybe there's a little bit of 30, you know, spreads and something like that, but I'm going to say about 30, 36, and then if it can get to the top up there, it's about 50 pips. That's when definitely as a scalper, you want to start to reduce risk. If it goes, I should, you know, I gotta trade more robotic on these calls. Okay, so just gonna open this up, put my stop below those wicks, see what happens here. I'd like to see some closing volume in here too, but I know I'm trading in this zone. Leo negative 1200 today. That's a difficult day. Okay, but remain composed, you know. Okay, guys, coming up there. I'm going to a break even, 50 pips, break even. I'm closing out 80% robotic style, okay? Closed out 80% at 60 pips, and I got 20% running, okay? So that's just a little bit of pancakes prior to Powell. That's it. All I did was, I saw it came in, wick. There's my point of interest on 5 minutes. Came back in. I noticed that it had tweezer bottom lows. I didn't explain it, but guys, I'm looking at these things like equal bottom lows coming right back up as it was filling. I said it's got enough juice to continue to just, you know, cut through this red zone, and that's all I was looking for, just to cut through there, right? As it was going up, I already measured it 50 points. When it hits 50, break even, scale out 80%. I got 20% running with break even. I hope this goes to the moon with that my remaining 20%, but I want to start to trade more robotic on these YouTube calls because I'm leaving a lot of money on the table myself, helping and teaching and things like that. That was, I told you, just a quick scalp. I'm not looking to take this trade and hold it till next week. Just grab 30, 40, 50 points and get out of the market with zero drawdown. That's it. Do you guys understand that scalp? Was it too quick for you guys? Let me know, guys, because I gotta. It helps with me what I'm teaching on here. That's a scalp. You guys gotta understand the difference between a scalp, an intraday trade, a swing trade, and an investment. You gotta know the difference. You see, I was barely in that candle for maybe 2 minutes. Quick, that's a scalp. And I don't care now what happens after the fact. Obviously, I want it to continue to go. That's why I only have 20% remaining at break even. So I want it, but 50 pips, are you kidding me? Just like that in a few minutes. If you get consistent with doing this on a daily basis, you'll just watch your account compound. There's going to be some losses. Yeah. Next scalp, maybe I give back 20 pips. Okay. That's how scalping works. You win, you lose. But if you know what you're looking for, you can be consistent. We've got traders in our group who took 10 scalps and they showed me their journal and they were 10 out of 10. They waited all day. They said, Ron, I'm figuring this out. I'm not working right now. I'm at home all day. I'll set alerts and look for 30 pip trades all day. And they're doing it with the right securities, right time frame, and the right mindset. And they're hitting 10 out of 10. That's not me. That's not Dave. It's someone in our group. Okay, someone who came here and learned how to do this. So it's a testament to them, not me. Okay, and then now, again, we pulled back 50%. If you were to cut that zone in half, you know, the red zone is right there, okay? And it's still holding. It came back up, and now they're pushing it down. Now you're 3-4 minutes away from Powell. So, you know, if you're in this trade, you can still hold it. I'm holding it with zero risk. Sometimes just for mindset, sometimes I just like to be out of trades and focus. I don't like to be in a trade while too much is going on. So I'm going to verbally tell you guys I am closing this trade now. I know it might go up more, but I'm happy. I just want to get out of this trade and focus on Powell, the bigger picture at what's happening, okay? So I've closed this entire trade now. It's done, okay? Don't want to be part of now Powell, you know, the games that they play. Okay, are we good now? Okay, that was a quick scalp. I wasn't looking for this to be a moonshot. Just look into it. I told you, just cut through that red zone, come right up there, and that's it. Stay point A to point B. That's it. Go from where you got to go, you get there, that's it. You're there. Don't be guessing, okay? If I got to go to Tim Hortons, I know where it is. Tim Hortons, this is this coffee shop where Ron is wired on all of this coffee. I know how to walk out of my house. It's only about a 5-minute walk from my house, point A to point B, Tim Hortons. I go there, I get my coffee, and I leave. I don't sit there at Tim Hortons. I don't chit-chat all day. I go there. I have a reason, plan. I have a system. I go there, get my coffee, and leave. Come back home. Okay, that's how I trade. I go there, I get what I look for, and I leave. I'm done. Whatever happens after the fact, okay, I don't care, you know. That's robotic style trading. That's what keeps me, this guy over here, consistent. Because I wasn't doing that before, and I was a very inconsistent trader. I didn't know when to close out trades. I didn't know what to look for. I had so much unrealized profit because I was looking for more and more and more, and then it would come right back down. And I wouldn't even be trading with a break even. I didn't even know what the break even was back in the day. I was just trading with either TP or stop loss. And majority of the time, I didn't know what to do with my profit, and it came right back down and started tagging my stop loss. Stop loss after stop loss, and losing money, losing money, losing money. Okay, so now it's pushing up. So maybe they're going to attempt a double top and drop it, or continuing breaking out, okay? Gold came down, pushing down. NASDAQ is building. Powell is going to talk now. I'm more interested than what Powell's going to say than more so to just take a trade, okay? I really want to listen because this could give us guidance for how the markets are going to move the next couple months, the early next year, okay? If you're listening to a conference call with like NVIDIA or things like that, you listen to the forward guidance. Here we go, guys. So be ready. There could be some explosive moves again, you know. And we have it over here. Hopefully it'll be live when he comes out and we'll hear everything. It's in the background, guys. I'm going to try and not talk as much when Mr. Powell is speaking because we're all here to hear what he's saying and not me, okay? If I let you guys know if I'm going in a trade, I will verbally tell you guys, okay? Efren, have a great day, bro. I'll see you tomorrow. Okay. If it closes above, I'm just going to go through the you know, green zones, things like that. Okay, but I know I might not be able to change it here. Okay, let's see what color tie he's wearing. It's a big issue with the tie. You can bet on it in Las Vegas. Yeah, I can hear him. Purple tie. Good day.
Good afternoon.
Here we go.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. we also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace.
We're retesting this block.
Activity in the housing
US30.
sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower
M pattern,
immigration
double top,
and
dropping.
lower labor force
Take out those
participation.
tweezer bottom lows. Take out
Even
that
so,
block and
labor
drop.
demand has
But we
softened,
watch for
and
volume
the
close
recent
below
pace
here
of
as well.
job creation appears to be
For
running
US30,
below the break-even
similar
rate
with
needed
NASDAQ,
to hold the
gold
unemployment
is breaking.
rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual.
2 more minutes to go for this
In
5-minute
this
candle to
less
close.
dynamic and somewhat softer labor market,
US
the
dollar is
downside risks to
retracing back
employment
up right
appear to have
now.
risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer
We're
run
going to take
goal.
out those lows.
Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations
Higher
have
low,
moved up
coming back
on
up.
balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6%.
Follow the last
in
30 seconds of the
2026
volume
and
where
to
it closes.
2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods,
Okay, so close
but
below
their
there,
overall
red
effects on
block.
economic activity and inflation remain to be seen.
Has it taken this one
A
out?
reasonable base case
Not yet.
is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our
Could be an
obligation is to
impulse
ensure
break
that a
and
one-time
break
increase in
this.
the price
That's
level
your M
does
pattern
not
double
become
top
an
breaking.
ongoing
Maybe
inflation
let's
problem.
wait for confirmed volume to close below
In the near
here.
term,
See how it
risks
came
to
down? Caught a
inflation are
wick.
tilted
That's
to
why
the
we don't want
upside
to take
and risk to
impulses.
employment to the downside.
It triggered a few buy
challenging
orders right there.
situation. When our goals are in tension like this, our framework
Gold
calls
is at a
for us
good
to balance
position. If you
both
guys want to
sides
look
of
for
our dual
buys on
mandate.
gold,
With downside risks to employment having increased, the balance
it
of
came
risks
and
has
hit that
shifted.
3671
Accordingly, we judged it
white
appropriate
line.
at this meeting to take another step toward a more neutral policy stance. With today's decision,
Coming
we
back up
we
for a
remain
possible
well positioned to
retest.
respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate.
Okay, so still
based
holding
on
good
what each
support at this
participant
block.
judges to be the
Let's
most
see how
likely
it reacts
scenario for the
inside here.
economy.
Will it get rejected or
The
continue
median
closing
participant
above?
projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026.
Also follow
and
NASDAQ. Maybe
3.1%
close above
at
here.
the end
Maybe
of
a bullish breakout as
2027.
well.
This path is 1/4 percentage point lower than
rejected.
projected in June.
Push down.
As is always
Closing
the
in 3
case,
minutes.
these individual forecasts are subject to uncertainty, and they're not a committee plan.
Spin
or
top bearish
decision.
bar. This might be the one that
Policy is
breaks
not
this
on a
level.
preset course.
Okay, you could entertain a feeler
The
sell
Fed has been
or
assigned
a
2 goals
impulse
for
move.
monetary policy:
However, if you're
maximum
waiting
employment
3
and
more
stable
minutes to the
prices.
close, okay,
We remain committed to
Intuition,
supporting
you
maximum
see,
employment,
came,
bringing inflation
rejected,
sustainably
pushed
to our
down.
2%
We got that new
goal,
low
and
below
keeping
those twos or bottom
longer-term
lows.
inflation expectations
So it's
well
a tough
anchored.
candle, but
Our
you
success
can
in
wait it out
delivering
or
on
go
these
with it.
goals matters to all
US
Americans.
dollar is moving up.
We understand that our actions affect communities, families,
If it
and
breaks, I might
businesses
go and
across
place my
the
stop
country.
loss above.
Everything we do is in service
Pushed
to our
up.
public mission,
One
and
more
we at the Fed will
move
do everything we
down,
can
right?
to achieve our maximum
Coming
employment
back up.
and price stability goals. Thank you. I look forward to our
Okay, question.
discussion.
Sorry, I was going to look to take a trade, but he's getting a question. I'm holding off. Casey?
Thank you. Chris
gotta listen.
Gaber at Associated Press. As you know, Fed Governor Stephen Myron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with
This is who Trump
executive
wants to
branch
appoint.
ties, in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
You didn't really answer it. Next question.
You and other Fed officials have spoken extensively about the impact of tariffs on inflation.
Tariffs.
Although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation?
You know, it's certainly possible. You know, we
Get ready. I'm going to get ready. If
we're
it
beginning
breaks
to
this
see-
red
we
line,
have
I'm going to
begun
go
to
in and
see,
sell, guys.
goods
Verbally telling you
prices
guys.
showing
If
through
it breaks this one
into
more time,
higher
comes down.
inflation, and actually the increase in goods prices.
One more
accounts
minute
for
to go,
most
so
of
I'll
the
wait.
increase in inflation,
I want to
perhaps
take the
all
sell,
of the
but I'm going to
increase
wait
in
it out.
inflation
I'm
over
going
the
to
course
wait
of
it
this
out
year.
for the final bar to close.
Those are
Okay?
not very
I'm going
large
to hold
effects
off
at this
50
point,
seconds.
and we do expect
I
them
really want to go sell
to
side.
continue to build over the course of the rest of the year and into next year. And you know, it's also possible and that there may be effects on employment, but
I hate when these
but
questions.
I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration.
But this
So
could
the
be a
supply
bar
of
that
workers
closes
has
below
obviously
with
come
volume, okay?
way
So it
down.
could be a
There's very little
confirmation
growth,
bar.
if any, in the
Gold is
supply of
dumping.
workers. And at the same time, demand
NASDAQ
for
and
workers
US30 are
has also come
still,
down quite
coiling up,
sharply,
ready to maybe redistribute to the
to
downside.
the point where we see
Oh, man, I
what I
missed
call a
that
curious
entry.
balance.
My fault.
It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because
Gwendolyn, you got in a
both
sell?
supply and demand have
Nice.
come down quite
Okay,
sharply.
here's the body close in 5
Now
seconds, guys.
demand
Again,
coming
if
down
it
a little
closes
more
below there,
sharply
it's a red
because we
zone near
see-
the
we now
low.
see
Watch
the
for an
unemployment
ignited
rate
bearish
edge
wick.
up.
Watch. Okay, close below. Blue, watch. Right at 200, breaking, could drop. We could fill right down to the bottom here.
Wall Street Journal.
Okay,
Chair Powell, do
blue,
economic
watch it get
conditions
rejected.
and the balance of
Rejected.
risks
Let's see if it
no
gets
longer
rejected.
warrant a restrictive policy setting?
So I don't think we can say that. What we can say
Okay, I'm going to
is
go in a
this,
sell.
that
I'm going to place
over
my
the
stop
course of
loss
this year,
above that
we
body of
kept
that
our
candle.
policy
Go
at a
red,
restrictive
green
level,
to
and
red
people have
zone. I'm in a
different
sell.
views, but a clearly restrictive level, I would say.
So if it retests
So
inside
we were
here,
able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all
I'm
those
going to
things.
open up stop loss
I think
for this period.
If you
They
go back to April and now look at the revised job creation numbers for May, June, July,
retested in
and
there. Let's
August,
see if we can kind of
I can no longer say that. So
push this
what
volume
that means
down
is
and
that
break it
the
right there.
risks, which
Okay, my
the
stop
risks
loss
were
is above
clearly
this
tilted
red
toward
zone up here.
inflation. I would
You
say
guys
they're
can hear me.
moving toward equality. Maybe they're not quite out of equality. We don't need to know that, but we do know that they've moved meaningfully toward greater equality. The risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted? And how seriously was that option
Listen to this
entertained
answer.
at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait.
Big
and
rejection
see
on
how
gold.
Tariffs and inflation and the labor market evolved. I think we're now reacting to, to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
Okay, we're coming back down to the opening balance. Remember, low wick could fill
Colby Smith
if it
with the New York
breaks
Times.
down to that
Should
yellow
we be
line.
viewing today's cut
Shooting
as
star
the committee
candle
taking
came in the
out
red
some
zone,
insurance
retested,
against the
shooting
possibility
star pushing
that the labor
down.
market is at risk of weakening, or
Here
is
we
it the
go.
committee's view that
If
the
it comes down to
dynamics
that
of the
yellow line, it
downturn
fills. That's
are
100
already
pips,
in
guys.
place?
Okay.
I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just
That's 50
3 months
pips
ago,
from
with the
that
fact
entry.
forecast
50.
for
Wow.
unemployment
Okay.
didn't change.
Okay. Start
Yeah,
if
I
you
think
like
could
to
think of
reduce
this in a way
risk.
as a risk
You're
management
welcome
cut,
at
because
50 pips.
if you look at the
I'm just
S&P,
trying to listen to what
actually,
he's saying.
the projections for growth this year and next actually ticked up just a little bit.
2 more minutes to go in the
Inflation and
candle.
unemployment
Can it
didn't
close
really
with
move.
that volume
So
below
what's
there?
different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking
Guys,
at
please manage your
150,000
accounts,
jobs
guys.
a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off, and that tells you that it's time to take that into account in our in our policy.
So just looking at the SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts.
Good
this
bearish
month.
candle. That's 65
so
pips.
I would look at it
Yellow
this way.
line target is
we
100 from
fully
that entry.
understand
Okay.
and appreciate that we need to remain fully committed to restoring
Volatility
2%
now,
inflation
going into the
on a
close.
sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals, and I would say since April, to me, the risks of higher and more persistent inflation have probably
Okay, so
become
candle bar flip,
a little less.
spin
and
top,
that's partly because the
was
labor market
bullish
has
when it
softened,
opened,
GDP growth is slowed,
rejected. Shooting star candle came
and,
down, coming back
so
up to
I
the
would just
opening
say that-
position. So we
that,
got to see now where this bar
that
is
the
going to
risks there
close.
have been less,
48 seconds. Can the sellers step back in and close it near the low?
And in terms of the labor market, what we're seeing
I'm still in the sell. I'm still holding. I
unemployment
haven't
is
done
still
anything
low.
yet.
It's still a relatively low rate, but we're seeing downside risks.
Watching last 30 seconds going into close. Even NASDAQ can be breaking that daily position and dropping.
Michael McKee
Gold
from, Bloomberg
pushing
Radio
down. Let's see
and
where.
television.
I'd like to see if volume can close below here.
A little
Closing near the
confused
low,
by
even
your
better.
explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration,
the close, 15
which
seconds.
your rate cuts wouldn't address. How do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has
Close.
more to do
Bullish
with
ignited candle.
immigration
Rejected
than it has to do
quickly.
with tariffs.
Can
That
it
was
push
the
to
question
fill
of the
that
same
wick
thing.
now?
So I
Coming
wouldn't
down.
say
Can
that
it
all
fill,
of
fill,
what's happening
fill?
in the labor
If it gets that
market
higher
is due to
low,
tariffs.
right, it's
I
going
mean,
to come
you
back
clearly
up, but
have
we got a nice
slowing
bearish
in-
candle.
due to
Rejected quickly.
immigration. You clearly have
Pushing
a slowing
down.
in
Let's see if we can
demand,
break my cursor,
which
the
is now
previous low.
perhaps more than
And then,
that in
yes.
supply.
Okay, so
And we know that because the
right
unemployment
there,
rate
it
has
did
ticked
break.
up.
We got volume near low.
So,
One more push, just one
so
more
that's how that's what I
redistribution
meant
to
by
that yellow line is 100 pips.
Every year since
Okay,
2015,
one more
the
big
SEP
push. We
has
got the
forecast
volume
that you
with
would hit
us.
your target
Let's
2
now
years
push
later.
it down.
And
This
this
is a new
year,
15-minute
this
body as well.
SEP
If you take a
says
look
you're
at your
going to hit
15-minute
target 2
body,
years later.
it's got a
2%
lot of
does
room.
not
It can
seem
continue
be
to
in
push down
sight.
that
Does
50-minute body,
suggest
get
that
down maybe to the daily low, but I'm
2%
targeting
target
that
is
yellow
not
line.
really achievable? And does this present any credibility
Beautiful.
problems
Come
for
down.
you?
Lowering
in
risk,
telling people
lowering
that
risk,
That's what you're going to do.
lowering to a
You can never
break
reach it.
even, up
Well, I mean,
almost
you're right. It
100
does say
pips.
we're gonna get
Break
to
even
2%
trade.
inflation in
BE up
2028,
190 to
but
100 pips, guys.
that's literally
I'm
how
going to
you
close
put
out
the projections
80%
together.
down there.
You're
Okay,
writing
closing
down
out
a rate
80%.
path, which is designed
20%
to
running,
create
80%
over the
out.
course of the SEP
Okay.
time
Are we
frame.
good there?
2% inflation.
Can you guys hear
and
me?
maximum employment too. So that's all that is. No one really knows
Perfect.
where the economy will
That
be in
was
3 years.
From
But the
point
nature of the
A to
exercise
point B,
is to
100 pips.
write down policy that
Okay,
we
now
believe would
we got
return
20%
to the 2%
20%
goal
running,
over
125 pips.
at least
If
by
it
the
can
end
get
of the
down to that purple line, that's the lowest point of the day. That could be a 175 pip trade, guys. This is big volume.
ABC News.
It's not 20 pips.
The latest
Everyone,
inflation report
please
shows
be
that
at a break
prices
even
are
on
still
this
going
on
up
this
across
call.
key categories for many households, including groceries.
Manage
What
your
will the Fed
profit.
do if
I manage
prices
mine.
Pick up more.
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that
if we get volume continuing to close below that yellow line, we could take another candle back down to get us to that lowest point. NASDAQ is breaking. Look for NASDAQ to close. Same with gold continuing. Wow, it filled that big wick. So it was kind of, they pumped it up and they're dumping it now with Powell.
We can't just assume that though, right? We have to, our job is literally to make sure that that is what happens, and we will do that job. Right now,
hit the likes on YouTube, guys. We got 700 viewers. Subscribe to the channel if you guys can, please. We appreciate it. If you haven't subscribed, we're here tomorrow again, 6 a.m. Eastern. Hit the subscribe, guys. Thank you.
Of the tariffs into inflation has been slower and smaller.
So I have 20% at break even. Okay. Yes, I know I could get stopped out, but that's why I took out 80% at that yellow line.
And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates.
I'll verbally let you guys know as soon as I get stopped out at break even, but it's
for a long time,
right around here. But again, the
when our two
volume
goals
is
are
moving
intention,
different
this
from
is
my
quite an
broker than it
unusual
is on here.
situation. How do we decide what to do? Because our tools
It's
can't
pushing
do
down
two
with some
things at
bearish
once.
volume coming back down.
What we do is we ask,
Watch to
which
see
is
where it
farther
closed
from- how
too.
far
Can it
is
close
each
below
from the
that
goal
wick
and how
or
long is it
come
expected
back
to
up?
get
So
to the goal?
hammer candle.
So and then
I'm out.
we think about those things and we see.
Okay, that's it.
As I
Trade
mentioned, we
is
have been-
nullified.
our
20%
policy had been really skewed
break
toward
even. I'm
inflation
out.
for a
That's
long
why I
time.
trade
Now
to
we
a
see
target,
that
guys.
there's downside risk clearly in the labor
I
market,
can't
and
stress
so
that
we're
enough.
moving in
Point
direction
A
of
to
more neutral
point B.
policy.
White line
Concerned are you
to
about the slowdown in the
yellow
jobs
line.
market for
That's
households
it.
at home, especially
Measured
younger
move.
Americans
We're
struggling
going to
to
do a
find
webinar
jobs?
on a ruler.
So
How
it's an
important a
interesting
ruler
labor
is in
market,
trading.
and obviously, we think
Measure
it's
the
appropriate
move.
that
White
we
line,
reduce
yellow
rates so
line.
that we become more
105
neutral, which
pips.
presumably will be better for the labor market.
Don't play games, guys. You measure
you
moves.
see,
You're
people
you're a
who are sort of
tradesman,
more at the
right?
margins, so
You're
kids
just
coming
like
out of
any other
college
tradesman.
and younger people.
When you use a ruler, we're using
minorities
rulers too. We have
are,
tools in our toolbox.
having a hard
Same.
time
Okay.
finding jobs. The
And then all
overall
we got to do is
job
use
finding
just
rate is very,
risk
very
management
low.
and not be greedy.
However, the
I got in
layoff
that
rate is
trade.
also very
Yes, I
low.
look
So you've
about
got
it
a low-
at it
a
now.
low
I
firing,
could have
low
waited
hiring
and waited and waited,
environment.
and
concern
then
is
sold
that
out of the red
if you start
zone.
to see
I
layoffs,
didn't. Right?
the
I
people
went
who
in
are
on
laid off
that when
won't-
it was
there won't
that
be a lot of
impulse
hiring
candle
going on,
breaking
so that
down.
can very
But I
quickly
will look at
flow
location where I
into,
placed my stop loss. I
into
could have
higher
got away
unemployment.
with a stop loss right about there, but I gave it more room to
healthier
breathe due to
economy, healthier
the
labor
volume
market, there would be
and
jobs for those
what we're
people. But now
trading
the
right now.
hiring
So I put
rate
it
is
about
very,
there.
very low.
As soon as
So
it started breaking
that's
down
been a
below that
growing
wick, going
concern
up
over the
80,
last-
90
last
pips,
few months.
take my stop
And
loss
it's one of the
to
reasons
break
why we
even.
think it's appropriate
While I'm
that
doing
we
that,
begin to-
I'm
begin to
got
shift our
another thing
policy
to do.
focus,
I got to take out some
toward a more
money,
balanced
right?
one.
So that's how, guys, just it's same with gold. If you guys are in gold, you know,
Steve Leisman, CNBC.
you could be
Mr.
taking out some
Chair,
profit.
in the past,
Wow.
during rate cuts, you used
Will
the
it
word
fill all the way
recalibration.
down there?
And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data.
But it is still below here, okay?
Really
So it's
here.
still, it came up,
So we often point
back
this out.
down,
The
lower
the
high,
SCP
red box
is-
still holding.
it's-
Volume is
it's
now
an
consolidating here.
accumulation,
This could continue to push down, but right now
of the
could, you know,
individual projections of
rotate
19
back
people,
up and drop it.
showing what
However,
they believe
it is a
at
lower high,
particular
lower high, lower
moment in
high.
time
That bear
to be
volume
the
could
most
continue
likely
coming
path
here.
for the
We
economy
could
and
stick
thus
with this
the
volume
appropriate path
going
for
into 3
monetary
p.m.
policy as well.
and let's see if it will close
And
below
as you
here.
know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes
Gold could be a
discuss them.
buy.
And so we always say we're not on a preset path. They don't
I would
really
wait to see if they
mean
take out that low. That's the lowest point of the day
actual
now.
decisions we make are gonna
Look
be
to
based
see it
on
take it
the
out.
incoming data, the
A
evolving
good
outlook,
buying
and the
area
balance
would be
of
deeper
risks,
down in this green
at
zone,
the time
especially at
decisions
that
are
yellow
actually
line,
made. So,
3633.
you will
If you're
have
looking to
seen that
buy,
we have
otherwise this is a
10
falling knife you're
participants out of
buying right now.
19
It's not the
who wrote
greatest
down
to
two or
do.
more cuts for the remainder of the year, and 9 who wrote down fewer than.
If
in
you're looking
fact,
to
in a
buy,
good number
feeler
of
trade.
cases, no
Start
more
very
cuts.
small.
So
Get your feet wet,
rather than
and then
looking
watch
at,
it. If
so
it's coming back
rather
up
than
in
looking
here,
at this
maybe we'll
as
go back
certainty,
down, maybe
I
a
would
double
encourage
bottom.
people, as
Then
always,
your
to
feeler
look at
trade
the
is allowing
S&P
you to
as-
see
through
how the
the
volume
lens
is
of
moving. Then you
probability.
can add to that
so there are
position
different
if you kind of
possible
see it
outcomes
building in this and
and
then going back
likelihoods
up. Okay.
rather than
Otherwise, you're
this
buying
one
a
is
falling
certain and
knife.
this one
I
isn't
would
happening.
wait to
So
buy
that's what I would
down in
say.
here. That's a daily point of
For
interest
getting
in
to
a
my
bigger
follow-up
daily
question.
demand zone.
Is the
Okay?
dispersion in the outlook
Also watch, did
a
they take
sign
out
of
that low
uncertainty of
liquidity and
policy
then
in the-
will they
in the-
reverse
in
this
the
thing back?
meetings to come?
I wouldn't be looking on buys on
You know,
gold right now.
it is such an
Don't
unusual
just think because it's
situation.
dropped so much that you got to be buying.
Ordinarily,
This
when
could continue
the labor
pushing
market
down.
is weak, inflation is low.
The
And
U.S.
when
dollar
the labor
is
market
is
really
moving
strong,
very
that's when
bullish
you
right
gotta
now.
be
With
careful
Powell
about
talking,
inflation.
it's
So
it's
we have a
it's
situation where we
retraced
have
its whole
two-sided
FOMC
risk.
and it's
And that
making a
means
new
there's no
daily high.
risk-free path.
The U.S. dollar
And
has
so it's
flipped
quite a
bullish on the daily.
difficult situation for policymakers. And it's,
So
it's
markets
not
may
at all
continue to sell off. Gold
surprising
might
to
continue
me
to sell
that
off,
you
guys.
have a
You know, there
range
might
of
be a little
views. It's not
sympathy
so
rally near the
much
end of the day in
about
power hour,
having different
but
views for the
markets
path
are
of the
going to sell
economy,
off.
but it's partly that. But it's
Follow
also
your daily
partly about
candle at the end
what's
of
the right
today's
thing to
call.
do in
Look
light
at where
of
the daily
this-
bar closes,
of the
because
tension
remember what I
between
was
the two
saying?
goals. How do you
4
rate
hour
them? How worried are you
evening
about
star
one versus
pattern.
the other?
Markets
And
could
so it's-
continue to
it's
sell
natural. I think
tomorrow.
it would actually be surprising if you
Swing
didn't
traders,
have a pretty
look
wide
for that
range of
4
views
hour
based on,
evening
you
star
know,
pattern.
in this kind of highly unusual situation, and we do. So
That's what I
but,
mean, guys.
you know,
Don't be looking to
we get
buy
together, we
until it comes
discuss,
in a deep
we have a great
location.
discussion, and then
Okay?
we decide what to
If
do.
you're
and we
looking,
act.
if you're
But,
a
you're
feeler,
right,
feeler, small,
it's a
test
wide
it out. If
dispersion
you get
of-
stopped
of
out,
views, and I
you
think
eliminate the
that's
trade. You get rid of it
understandable and
without
natural in the
losing a
current
lot.
situation.
So we're continuing. We're going to probably
Hi,
break the
Victoria
lowest point
Guido
of the
with
day.
Politico.
Political.
You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching
President
to
Trump
determine
question.
that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now. And people they're making their arguments, and we're having a great discussion around these challenging issues.
Today's daily candle flipped. Remember, there's the double top, guys. Do you guys remember when Powell started talking? I was drawing this, the double top. There was the candle bar that closed below. I went in a little too early, but look at how it retested the zone, got rejected, and continued to push down. It came up and got me on my break even, right up there. It's unlucky, but now it's breaking down. Okay, so look at that. Just a technical M pattern. See when they broke it out? Do your review. 2 p.m. came up, 205. 210, 215, brought it right back up, 220, 225, Powell, 230, M top, double top, retest, 235, close below, and it started 240 dropping to the lowest point of the day.
The revision
Pretty
that we saw was
technical
almost
trade
exactly
while
what we
we're
expected.
doing FOMC.
It was amazing how close the
Gold,
expectation was. So, and the reason for that is
review,
for the
crazy
last
opening
bunch of
candle,
quarters,
came up, new
there's
all-time
been
high,
almost a
and since
predictable
then, just
overcount.
dropping.
And I think the
Close below
the
that green zone,
Bureau
go
of Labor
red.
Statistics really does understand this, and they're working hard to fix it. It's got to do of course, it has something to do with low response rates.
Okay,
But
now
also
it's
got
coming
to
right
do with
back up.
what's
It
called
took
the
out the lowest
birth
point of
death
day,
model,
bullish engulfing
because a
candle,
good amount
bullish
of job
ignited candle,
creation
coming
happens
right back up. Could
around new-
retest, could trade
new
in here.
companies and
If
how
you
many
guys are going to
out of
continue
business,
to
how many
trade
founded,
power hour,
and it's just
that's the
really
last
hard.
hour of the
You
day.
can't survey for
You
that.
could be
You've gotta
doing
have a
it,
model
but
that
Powell is
predicts that.
still talking.
It's quite
Okay?
difficult to do,
Still
especially
going.
when the
Normally it's
economy is
done.
undergoing big
Normally by
changes.
3 he's wrapped it
and
up.
They've been working on that and are making progress on it. But the data we get is still well good enough for us to do our work. To the extent we have
Do you guys have
issues
any
around
questions?
data right
How
now,
was
it's
this
about low
FOMC?
response
Did you
rates.
guys find it
That's
very
happened
difficult?
all over really.
Man,
Response
I'm
rates are
reading
just lower to
YouTube
surveys
and I
now, both
see
in and out of the government.
Jamal,
And
you
it's
lost
no great
everything.
secret.
Isaiah,
We want higher
same
response rates.
with you
so we
too.
need those to have,
What were you guys
less
doing?
volatile data. And the way to get that is to make sure
Were
that
you-
the agencies
man,
that collect the data
I
have
don't know what to
sufficient
say, guys,
resources
anymore.
to drive higher response rates.
How do you
It's not a
lose
complicated
all of
problem,
your
but
money in your
that's what it
account?
takes. It's
I
not a
don't. This
mystery.
is what I don't
That's what it
understand with
takes. The other thing
traders
I'll say,
today.
Edward,
How is this
in the
possible?
case of the job creation,
Maybe
the
I'm not
response rate
understanding,
is
guys,
quite low
but
for
what
the
are we
first month
doing?
or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
Yeah, probably full porting, high
well,
margin
for
trading.
benchmarks, if
Again,
that holds, it's
do you want to
51% of
be
the
the
jobs,
person that
we thought were there
loses
weren't
all
quite
your money
there.
in your
It
account?
shows a weaker market.
Guys, we got to
job
stop
market coming
this.
into
Okay,
this year.
you
If
got to
had
learn how to
that
trade
information, would it
properly,
have changed
right?
your mind related to where the interest rates should be? Should there have been a cut earlier?
You know, we have to live life looking through the
FOMO.
windshield rather
What are
than
you
the
FOMO
rearview
of?
mirror, as you know.
We
And,
got trading
all
tomorrow,
I
the
can
next
tell you is
day. What are we?
see where we
What are we
now,
fear
and
of
we took
missing out
appropriate
on? What are you
action, and we
guys
took that appropriate
fearing
action
of
today.
missing out on? Right? Just look at it logically. What are we missing
Thanks,
out on?
Howard Schneider
There's
with
going to be
Reuters.
volume
So,
tomorrow. There's going to be volume on Friday.
as you
Next
mentioned
week,
a minute
candles
ago,
are going to
some
be moving
marginal
up and down
job markers would
sideways.
suggest that
What are
there's
we
slides
missing
already
out on?
happening.
Nothing.
A black unemployment rate
I don't
in August
understand,
was
guys.
above 7%, declining
If you're looking for
work
buys
weeks,
in gold,
difficulty among college
my
graduates
alert
finding
is right
work,
there.
rising youth
36.33.
unemployment.
That's where I'm
Why do
looking.
you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that, you know, you see minorities, unemployment
Powell's
going up,
cooking
you
today.
see
He hasn't
younger
stopped. Normally,
people who are more
he's
vulnerable
20 minutes and he's
economically,
outta here.
more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation.
Let the man
that
cook.
shows you that
Let
at
the man
margin,
cook right now.
The labor market is weakening. I would also point to labor force participation. Some part of the
Yeah, I don't want to
significant
interrupt
decline
him.
in
When the
labor
chef
force
is cooking,
participation over
I
the
know my
last
role.
year has probably been cyclical in nature
Let
rather
the
than
man
just
cook.
the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So
Gold
we
is going
use
to fly
our
up.
tools. And,
Okay.
you know,
Yeah, let's see if it
starts
can
with a
continue
25
to
basis
build.
point,
But it came up there, got
rate
rejected
cut,
back
but
down.
you know, the
Let's
market's
see. Maybe
also
we can
pricing
find
in
one
a
final
rate
trade on
path.
gold.
I'm not
Okay.
blessing what
Let's
the
see.
market's doing
I'll
at all.
trade
I'm just
gold with you
saying
guys.
It's not just one action.
I know we're going into 3 p.m. in 38 seconds,
As
so
a
let's
follow-up
watch
to
here.
that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
But I also like US30 too.
I wouldn't say that. I mean, you're right.
Let's
Those are
see.
two.
Power hour. They're
we're
closing it
we're
right
getting
above there.
unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may
Consumer
well
spending
be
numbers.
skewed
Remember
toward
we traded it?
higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So I mean, I think the economy is it's moving along. Economic growth is going to be 1.5% or better this year, maybe a little
Nice
better.
pump coming back up.
Forecasts have
Maybe
been
we
coming
wait
up,
for a
as you can see.
pullback buy in
So,
here.
Labor market unemployment is low.
Gold could be building
but,
now.
You know, downside risks, but it's still a low unemployment rate. So that's how we see it.
Okay, pushing down one more time. Let's see if it breaks. Top of the green box, 36.42,
MSNBC.
or right in here,
Treasury Secretary
36.33.
Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat.
Okay, came in right
He's now
here,
calling for an
rejected yellow line,
independent
coming back
review. Would
down.
you support
See if
an
it holds here,
independent
or more
review,
importantly,
or are
this
you
zone,
open to any
50%,
sort of
point of control that
reform in any
candle.
areas of the
If
Fed?
we're looking to buy it back up.
Of
But it
course,
could
I'm
sell
not going to
right back
comment on
down.
anything the Secretary says or really any
the markets
other,
might continue pushing down,
officer
guys.
says. So in terms of reform at the Fed, you know, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Bank Federal Reserve System and at the board. Are they the right size? We're actually going through a 10% 10% headcount reduction.
Building back up.
Through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that
Okay,
will
right back
be
up, building up. We'll get
basically at the
one more
same level
pullback
it
for a
was more than
refueling
10 years
phase.
ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably
Gold,
do more
hammer
than that.
candle.
So I think we're
Let's see,
we're
maybe gold
certainly
found a little
open
bit of
to
one
constructive
bottom.
criticism
Okay,
and
neckline inside
ways
here.
to do our jobs better.
But not an independent review?
We're certainly open to you
Pull
know,
back on the US30, coming back
to
down.
always trying to do better.
Will it refuel itself one more time with 3 more minutes to go? Lots of time left on the candle.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think.
Let's try a gold
my
buy on this
view,
hammer.
which
I'm going to
is
go in.
also
This will
a
be
bit
my
of
last
assessment, but
trade.
widely shared, I think.
I'm going to
is
go on
that
a
you are
gold
seeing
buy.
Some effects, but it's not
Nice
the
bullish
main,
candle.
not the main thing
Okay.
driving it.
So let's see
And
if we
so
can go right
particular
into that red
focus on
zone.
Young people coming out
Measure.
of college.
I haven't adjusted everything
and
yet.
Yeah, there may
Okay,
be something
so just
there,
right there
maybe
is 30
that
pips to the
companies
purple
or
line. That's
other
70 pip
institutions
trade.
that have been
Okay,
hiring
just to the purple,
younger people right
50%
out
of
of
that zone.
college
I'm in a
are
buy
able
on
to
this.
use
Just a little bit more
AI better-
push
more
up.
than they had in the past.
Stop
That may be
loss.
part of
Okay,
the story.
I'm going to go a little
It's
tighter.
also part
Stop
of the
loss
story,
right
though,
there.
that, you know, job creation
It's
more
in
broadly
profit
has
right
slowed
now.
down. The
Let's see if we
economy
can
has slowed
push
down.
right up on gold.
And so
There we
it's
go.
probably a
There we
number
go.
of things,
That's
but
a
yeah,
target.
it's-
Target.
It's probably a factor. Hard to
Break
say how big it is.
even. Break even. BE. Scale out 80%. Easy.
Thanks,
Easy
Mr.
money.
Chairman. What evidence do you see of tariffs showing
60
up in
pips out at 80%
Well, if
and
you-
break
you
even
can take
running.
goods, just
Guys,
sort of the
it
broad
came
goods
down,
category.
inverted hammer,
And, last
retested
year,
hammer candle. I bought right
inflation
there,
was negative.
taking it to the
If you go
purple
back
line.
25 years,
No
that
guesswork.
Was the typical
all clockwork.
thing was that goods inflation.
Same
was
shit every time.
goods
Doesn't matter the
prices generally
security.
went down,
Follow your
even
price
adjusting for
action.
quality.
Okay. And
So
yes, I know it could
that was
go
not the
more
case
and
during
more and
the
more,
pandemic, of
but this
course.
is
Goods
a
inflation went
level
very high.
for a
We had
particular
essentially
reason.
returned
You guys
to
know that that purple line
zero
was
or
today's
slightly
lowest point of the
negative
day.
inflation.
It came
Now,
down.
I think
Now we're
goods
coming
inflation over
retracing
the
right back.
course of
So
the
it could be
past
resistance
year
to
is
push back down.
1.2%,
It could technically
which
break
doesn't
out.
sound like a
I've
lot,
got
but it's a
80.
big
I've got
change.
20%
So we think-
remaining
I
to
mean,
allow it to do
analysts
that
have different
with
views,
break
but we think
even.
it's contributing,
Okay, you guys understand
you know,
that? That is
0.3 or
again a
0.4 or
scalp.
something like that
Scalp
to the
for
current
30, 40,
core
50,
PCE
60
inflation
pips.
reading, which is 2.9%.
Those could be
So
daily goals
it's
for some
contributing.
traders.
What seems to be happening.
See, now you can't
is
take it because
that,
your spreads are high.
you
I
know, the
understand that. I
tariffs
understand.
are
I'm not a
not-
broker, okay?
mostly
So I
not
can't
being
control
paid
spreads.
by
My spread is
exporters,
0.4.
mostly being
0.4.
paid by
Half a pip. I know
really
some of
the
you guys have more.
companies
right?
that
I'm not a
that sit
broker. I'm sorry,
between the
guys.
exporter and the consumer. So if you buy something and you sell it through retail,
But
or
that's
you
a
use it
quick
as a
little
product,
scalp, guys.
you're probably
Guys, I have to
taking
end this
those
call.
a lot of those
It
costs
is.
on and not
Let me just turn
able
this
to
off.
pass it fully.
Guys, I got to end this call because I got to go grab my daughter at school. It is past 3 o'clock that we were scheduled just for this. You know, we got two quick scalps myself, like on this. But if you're going to continue trade, guys, you know, we'll just watch where the daily bar closes, where the daily bar candle closes, okay? Because this will help you with review for how markets will move tomorrow. Powell's not done. He might talk another 10, 15, 20 more minutes. If you guys can later tonight, if you want to review it again after it's all done, we'll come back tomorrow morning, 6 a.m. But guys, we got it later tonight. We've got a webinar, live webinar on Zoom, where we'll come in. We'll talk about some trading tools. You know, how to fix your Fibonacci tool, rulers, horizontal lines, horizontal rays, rectangle zones, supply demand zones, all of these things. So we'll do all of that. Okay, guys, I'm happy today. We had a good session. Unfortunately, I read on YouTube there was some traders that blew their accounts. it's something you guys need to work on. You know, you guys need to work on that. I hope you guys do work on that and get it better, okay? We're not here to gamble. We're a different community over here. We're not gamblers. We're not full porters. We're here to learn how to trade and sustain this for multiple months and years down the road. We're not one-hit wonders over here, okay? So hopefully you guys can continue learning. Hopefully this runner wants to continue to break above here and get us to the top of that red box. You know, measure your move. That would be about 110, 120 pips up there. If it wants to continue to go, that's what runners are for. Let the runners go. But the bulk of the trade, especially at 70 pips, 60, 70 at a located zone, don't be scared to grab some money, guys. That's how accounts grow. Your confidence can grow. You can grow your accounts, grow your confidence, compound and grow and grow and grow, okay? Knowledge is power, guys. Keep learning. If you can leave us a like on today's FOMC bonus session, we do appreciate it. Again, subscribe to the channel. Join us tomorrow morning, 6 a.m. And I'll see you guys in Zoom at 7, where we're going to learn about Toolbox and some technical indicators. Okay, guys? Have a great day, everyone. God bless everyone. We'll see you guys tomorrow morning, 6 a.m. Continue reviewing your journals and your charts, guys. Okay, have a great day. Be patient, be disciplined in the markets. Don't force trades. Utilize feeler trades if you've got a hunch of something. If you got conviction, go in with proper risk management. Point A to point B. Know where your stop loss is. Know how much you're risking. Make trading easy, guys. That's it. Just make trading easy. Stop complicating this stuff. Okay, and have a great day. Hopefully the runners can continue to run. Thank you, guys. I appreciate you guys. Have a good day. Thanks, everyone on Zoom. So sorry, guys. I gotta take off. I don't want to be rude, but I gotta go. 7 p.m. later tonight. If you guys can join indicators, some tools that we use on a daily basis. If you guys have any questions, please come in with questions about the tools that we use and break them down. And it will also be recorded, and uploaded to the website if you can make it. So because this could be
hey
one
guys,
day
good
coming
morning,
back up.
good morning. Welcome to the live session of
Let's get
Stocks
closing
Trading.
evidence, closing
My name is Dave, guys. My
volume.
partner's Ron. Let's get down to business here, guys.
In on
I'll see you
US30,
guys
sell.
all later
Okay?
tonight, if not
I'm
tomorrow
jumping
morning,
in.
6 a.m.
Guys, that's a
Have a great
100
day.
pip drop. Yes, we caught it. Hey, guys, 200 pips, please.
Thanks
Secure.
for the link. I appreciate it. Thank you for the link. Thank you.
Recording stopped.